Why are we never prepared, Aaron? Why are our microphones never on?
I don't know. I don't even know.
I've been here since 7 a.m. I've streamed for 4 hours already, 3 hours.
So you should know how to work a microphone by now.
Yeah, you would think so.
Spencer, we've got a busy day today on a Friday. I feel like that's kind of atypical for us on Fridays. Typically, Fridays are quieter days in the market, but not here on Benzinga Live. Not today, at least. We have Qualcomm's CFO. Qualcomm might be by market cap the biggest company we've ever had on the show.
Yeah, probably.
I mean, there's some like REITs or something, I don't know, that we've had that maybe.
No. I think Qualcomm might be the.
What's the market cap?
I'm trying to think of Qualcomm.
Yeah.
Oh, you're throwing me under the bus. Let's go to Benzinga Pro and find out. Because when in doubt, go to the Pro. Qualcomm market cap is $166 billion. So
that's 100. That's like a.
That's
almost Elon Musk could only barely buy Qualcomm.
Yeah, you could buy like 1.5.
No, I think Elon Musk only has like 200 bill. No,
like 250.
250,
maybe.
He's lost a lot.
Wait. Well, yeah, he's getting it back today though.
Yeah, he also sold.
No, he did sell some. So that's true. Anyway,
Tesla up, we have 4%. We'll talk about some moving stocks before we get Qualcomm on. So just quick rundown. We've got Qualcomm CFO coming on at 12. Then we got Tim Quast at 12:30 from MarketStructureEdge. We have an in-person guest today, Spencer.
Those are rare.
In person, Gabe Karp.
Detroit Venture Partners?
Yes, that Gabe Karp.
That Gabe Karp?
That Gabe Karp will be in person.
That's cool.
Here. Yeah, Aaron.
Aaron, go fetch him when he shows up.
No, we have to. No, first of all, Spencer.
He's not here yet. You have time.
But we have to register him as a guest in the building.
Oh, well, that was your responsibility. So, all right. Anyway, we're here. We're ready. And I did a thing this morning. I want to tell you about it. No, I didn't buy. Well, technically, I bought something, but it's not. I didn't buy a stock. I didn't buy. It wasn't a.
Buy an option?
No, it wasn't a security. It wasn't a stock or an option or an ETF or a crypto. It was not. I paid for something, but it's not like it was an investment in my future. Let's leave it at that for now. And yeah, we'll just kind of hang out, talk about the market.
Jay Rice, I did make some money on Amazon. If you were watching yesterday, or if you were in Benzinga Pro, I posted this in Trade Ideas. I played a put debit spread on Amazon. My exact thesis ended up playing out. Just that last quarter for Amazon, I'm going back to when Amazon reported in like February, was not very strong, but they got kind of bailed out by the revenue they had made from the Rivian deal. That was not going to happen this quarter. They didn't have that, kind of saving the day, and we saw what happened. So I think my final trade, it was 150% profit when it was all said and done on Amazon.
All right,
not bad. Although I did essentially the same thing with Google reverse, but with call spreads, and that didn't work. So it all evens out.
All right. Well, smash that like button. Let's get this show on the road. Let's play our intro.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How are we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news.
All right, how are we doing, everyone? How are we doing? Born to be Free, Jay Rice, Zoltan. Zoltan's the guy that got us Qualcomm. So Zoltan did a great thing. He did a great thing.
I want to check on. Did you see Alibaba today, Spencer?
Yes, I did.
Up 11% right now, holding its gains.
Is it holding all the gains or just some of the gains?
So it went up to 102.72 about its highs, and it's currently at around 101. So it's given up like $1.
All right.
So for all intents and purposes, it is holding its gains. We'll see if that continues, because Alibaba is prone to make these moves and then kind of give them all up, I've learned. So
you've learned.
Yeah, I mean, just anyone who watches the stock. But
Born to be Free taught his son how to play golf today. Born to be Free, me next, all right? Gotta teach me how to play golf.
I wish I was on a golf course today, honestly. Well, I mean, not like during, like after work.
Yeah, right. After work.
Yeah.
Yeah. Cool. All right. Wait, so Bob was holding up. How's the rest of it doing? How's JD doing? JD's doing all right? A little bit less so. A little bit less so. Baidu, want to check on that. Huh, it is interesting how these stocks don't look identical today. You would think they would all trade together, but they don't. It's kind of interesting, right?
Yeah. So
FXI. Let's do the FXI as our proxy for everything. All right, still up 5%, but zoom out and whoa!
you want to talk some
The
Apple?
pain never ends in China. Bearish China forever. That's my new take as of like last week. Bearish China forever. Do I want to talk Apple? Yeah, let's talk Apple.
Apple's not trading like a stock that just reported earnings yesterday.
What do you mean?
Like it's just down 1%. Like you expect these big tech companies to either be trading.
Do we know what the expected move was, everyone? Can someone help us out here? What was it? Was it the expected move like
I mean, I can tell you it was probably somewhere in between
$13?
$3 and 5%.
$10 maybe? $10 sounds like a reasonable. Anyway, you're right. It's been relatively quiet. If you guys weren't there last night, you missed us hanging out on the Apple earnings conference call stream. It was a lot of fun. I'm gonna start doing that more. So like what we've been doing these earnings streams, right? We'll just stream the earnings conference call and like that's all fine and dandy. But it was a lot more fun to like hop on beforehand and just talk about the report before the call happened. And then once the call ended, talk about the conference call. We're gonna do that again next week. I don't know who the big earnings reports are next week. There aren't as many as there were this week, obviously. But if you know of a big company reporting earnings after the close next Monday, Tuesday, Wednesday, or Thursday, drop that ticker in the chat for us, and we will consider doing an earnings stream because they're honestly a lot of fun. Anyway, the Apple conference call and report. I'm gonna say it was mostly good with one major caveat. That caveat being the $4 to $8 billion charge they're expecting from global chip shortages and the lockdowns in China. So that is sort of the dark cloud hanging over Apple right now. But demand is more or less strong. I mean, there was like a couple pockets of weakness, but services revenue hitting an all-time high. iPhone is still chopping. It's still a monster. Honestly, my take was, I said this morning on pre-market prep, and I'll say it again now, is if you believe that the global shortage of supply of semiconductors and the lockdowns in China, if you believe that those are temporary problems that will go away in the next few months or maybe even like a couple quarters, then any dip in Apple is probably a dip to buy. If you think these are going to be longer term challenges, then you probably don't want to buy Apple. That's sort of what it comes down to. They kind of punted basically on, well, they didn't punt. They said there's going to be a $4 to $8 billion charge. And so now all that matters is next time we go around, next merry-go-round, 3 months from now, when they report for the current quarter, do they say that the problems have gotten better, or do they say that they've gotten worse? And if they've gotten better, then Apple will rip, and if they've gotten worse, then the stock will do what it's doing now, probably. So that's the bottom line with Apple. It's still a beast of a company. I tweeted the stat last night. They make more money from wearables than Netflix does for Netflix.
Yeah, so. I mean, I just think I kind of am starting to think more just the FANGs overall, kind of big tech in general, will just continue to kind of be choppy throughout the year. Not really make any substantial moves to the upside or downside. And if that comes true, at least the silver lining is that that will be the absence of any big moves to the downside. And sometimes moving sideways isn't the worst thing. We actually saw that. I was looking back on Apple's chart. We saw that for like There was one point, I want to say from last fall, like fall 2021 to, let me check the chart real quick.
What, you want to share your chart or no?
I can.
I mean,
I'll
I
leave it
don't,
on Benzinga
I
Pro.
don't know. I don't know what you're looking at.
I was just looking at it on Robinhood because it was easier because that's what I had up. I can get up on Benzinga Pro and share it.
I think you should.
But there was like a 6-month stretch, essentially, where Apple didn't really do much.
It's been more than that, I think. No?
Well, I don't know about currently, but this was a while ago. This was before it moved up to where it is. Hold on, I'm about to get a chart. I'll show
Okay. Okay. You get that chart.
you. Yeah, and just everyone else let us know in the chat. What stocks have you guys been watching? What stocks have you guys been trading?
we have a few tickers in the chat to discuss already, but wait, my call out for next week. Ali says Mosaic. Trade Green says Ferrari, which is Wednesday. Ali, Mosaic, even I understand why you'd say that, right? Because the stock has been went parabolic. It went from 40 to what, 80? Did it get to 80? No. But it almost doubled in what, 2 months? That's cool. I'm gonna tell you, Ali, we're not gonna stream Mosaic. Sorry. It's not sexy. Race is sexier, but it might be a little bit like small. Like Race's market, maybe it's not small. It's $39 billion. I don't know. Do we want to stream Ferrari? I mean, just look at the stock. It's not a very exciting stock, right? Look at the volume.
It's cool though.
The volume it trades like 2 million shares a day.
Yeah.
I don't know. Can we do a little bit better than Ferrari and Mosaic? I don't know if I'm feeling streaming those comments. Like, do we have like here? Let's go to the calendar.
Oh, Dante said he wants us to go over Ford and Lucid. Dante, we can do that.
Yeah, we can do that.
We can do that for you.
Let's go to the calendar in Pro. And let's look at next week here. Whoops. Hold on. Go to the 6th. Good. Oh, I never do this right the first time. I don't know why I can't do it. 2 to 6. Okay. This is next week. I'm only filtering for the companies reporting after hours because that's when we do these streams. And I'm sorting by importance, the importance column. All right, eBay is AMD is wait, what day is the 3rd? Is that Tuesday?
The 3rd might be Monday. No, you're right. Tuesday.
No, the 3rd is Tuesday. All right, AMD on Tuesday looks like fun. What if we do that?
All right.
Uber is Wednesday. Do we care about Uber, guys?
Ooh.
If we do Uber, Lyft is also a Tuesday, but I don't know if I care about Uber or Lyft, honestly. Do we care about Starbucks or eBay?
Starbucks, I feel like people care about for whatever reason.
Maybe. Yeah. I could get talked into doing a Starbucks stream. I don't own the stock anneanymore.
I feel like Starbucks always there's always something in their earnings call. Like it's either always really good or really bad. It's never just business.
Palantir. Okay, that's 2 weeks from now. But that's a good suggestion for. Can we do Dropbox? Yeah, I just saw Dropbox is on the calendar. What day are they?
Dude, Starbucks is below its pre-COVID levels.
Dropbox is Thursday. We can potentially do Dropbox. Yeah. All right.
Is this union fears? What is this? Why?
Starbucks?
Yeah.
Man, I sold that thing at like 100.
Dude, it's below its pre-COVID levels. Yeah. Before COVID crash, it was at $89.
Dude, I sold Starbucks at no, it was like 110. I think I made out like a bandit on that trade. It's I don't think it's union. It's just costs in general, right? Costs are going up. There's a Starbucks by me that is never open, ever.
They're having big staffing issues.
Ever.
Wait here, let me show you. This is what I'm going to show you in the Apple chart.
Yeah,
so this is Apple on the weeklies. So this is August 2020. There's a big kind of skinny candle. Looks like we hit highs of 137, but not even all the way up to those highs. This is just 130 right here where my cursor is. Okay. If you bought Apple at 130 in August of 2020, you can go all the way on this chart and look. You were at 125 in June of 2021. So 10 months after you bought Apple at 130, you're actually slightly in the red. But then we made this big move up from 130 all the way to like 180. This is back in January when we were talking about Apple becoming the first $3 trillion company, hitting $180 a share. And we've since kind of, like you said, Spencer, just recently not been doing anything, but only for the past like 3 or 4 months, and certainly trading lower well off those highs. But basically my point was, this happens with Apple sometimes, or at least recently, for 10 months, just kind of up, down, until we finally make that big move higher. So obviously, ultimately, I think we will see that big move higher. I just don't expect it really soon. I think we'll just continue to see Apple move up and down and not make any substantial moves one way or the other.
So you're neutral.
I'm neutral.
I want to give credit to me for a second.
Okay.
I want to pat myself on the back.
All right.
Let me pull up my chart. I just want to we'll go to the SPY. I was saying in January that I thought it was going to be a sideways year. Okay? Just chop. Up, down, all around. I think I've been pretty right. I mean, right now we're at the bottom of that range, right? You can see it on the chart, but I've been pretty right here. Oh. I'm getting a phone call. It's Jason Rasnick.
Uh-oh.
Guys, do I answer? It's Jason Rasnick.
Yeah, answer it.
Should I answer on the stream?
Yeah.
What's up, Raz? Yep. Oh, yeah. No, but Aaron Bree's supposed to. Do you know anything about Gabe Karp, Aaron?
Yeah, he wrote a book.
Yeah, okay, Aaron knows about the book. Okay, yeah, we're going to ask him about the book. Sorry.
All right, tell him we're in the middle of the show right now.
Aaron knows about the book. Sorry, Raz, we're doing a show right now, but Aaron knows about the book. Yeah. Oh. All right. Yeah, you should definitely join the show. Join the show today. Definitely. Yeah.
What are we supposed to do?
Yep. We're gonna come on.
What are we supposed to do?
Sorry, I'm putting Raz on speakerphone so we can
All right,
so
Jason
we can hear.
Rasnick live.
So
on
no,
Benzinga.
Raz is gonna come on the show at like 1:00 with Gabe
right.
with Gabe Karp.
Cool.
I can, yeah. And then,
Live in the office.
No, like from his house.
Okay.
Yeah.
I have to go to Ann Arbor for a commencement. Our main investor in Benzinga has given the Ross Globe business commencement today,
Oh, that's exciting.
so I have to go for that.
All right. Well, why don't you hop on the show? Hop on the show in like an hour.
All right, but Aaron Bree, you should read like an Amazon review about it. No more, okay?
All right.
All right.
Great idea.
There we go. See you, Raz. He just wanted to know that we did. He wanted to check if we did our homework.
Yeah.
I did not do our homework.
Yeah.
Did you do your homework?
I did.
Okay.
I read about the book.
Okay.
Well, because so in the email when I first got like looped into this email,
Yeah.
it was like, oh, Gabe's book. I'm pretty sure it said the title in the email, "Don't Get Mad at Penguins," and I was like, oh, that's an interesting title. So the first thing I did was Google the book to see what it was about.
What is it about?
So I was like, who would get mad at penguins? It's about conflict and like embracing conflict within the workplace and in life in general. Because basically he's saying that, well, I don't want to get too much into it because we're going to talk to him about it. But he's basically saying that by not embracing conflict, you're putting off, things that are going to happen. And
All right.
it's just more productive.
All right. Man, you know it's serious when Raz calls you. Is he calling you now?
No,
Oh, okay.
I was just checking to make sure I didn't have a missed call.
Oh man! All right, we're gonna have the CFO of Qualcomm, Akash Palkhiwala, on in about 9 or so minutes. Just for awareness, everyone, that's going to be the one of the highlights of today's show. I've been looking forward to that. I have so many things that I wanted to talk about. We're sort of all over the place today. I want to tell you about the thing that I did. Maybe we'll save that for after, Akash, because I did a thing this morning. I did it on pre-market prep. I was multitasking. I'll save that for after, Akash, actually, because I'm excited about it. Maybe it's like a stupid thing to be excited about, but I'm excited for it. Anyway, as I was saying before Raz called, credit to me. I feel like I've been pretty doggone right this year. I've been calling for a sideways market. We've been pretty choppy. No,
Yeah.
Do I get a little bit of love?
I've been pretty wrong at times,
'Kay.
but right other times. So
All right.
it is what it is.
I mean, we're at the bottom of the range right now, but like, we're gonna maybe we head back up to a little 450, a little 460.
Yeah, if there's one thing I've learned, if everyone's like, oh, we can't go any low, whatever, like, don't trust that. I remember thinking.
We can.
I remember thinking in like May of 2020. So at this point, we were like 2 months removed from the COVID crash, and we like had already gotten back to where we were at before. And I was like, oh, the market like can't keep going higher. Like this has got to be the top, and it went up another like 30%. So I've just realized like even if it feels like the current trend you're in can't continue, it can. So yeah.
Yeah.
I'm hoping we bounce from here. I'm hoping we bounce hard. I'm hoping V-shaped bottom to 480 like by 2 weeks from now.
Whoa.
That's what I'm hoping for. But I don't think that's gonna happen.
No.
Like,
I don't think it's gonna happen either. Wait, how's Amazon doing today? We haven't even talked about Amazon yet.
not great, Bob.
Not great, Bob. Oh, it's at the lows of the day. Watch out. Okay, Amazon. I'm even more convicted on, because my comment about Apple was if you think the headwinds are short term, you should probably buy it here. Amazon is uniquely positioned to get like screwed by inflation in all kinds of ways. But if you think that inflation is going to eventually come back down, then I would gotta think that Amazon is not a bad buy here. If you think inflation is going to come down, if you think inflation is going to stay elevated for 12, 24 months, then Amazon's got some problems, right? But if you think inflation's coming down, I mean, it's not very often you get the chance to buy Amazon down 12% in one day, right? Or do you just wait for it to shake out? You probably wait for it to shake out.
Yeah, I think at some point though, Amazon just becomes what it is, and it's not like an interesting investment.
Really? I think Amazon's like the most interesting investment.
I guess because like they're AWS, but I saw what I've been seeing a lot of like critics of Amazon basically trashing the retail business and saying Amazon has like so much potential to just kind of lean into the AWS cloud side, like, and they are, but basically just that, where the most of their losses were coming from the retail side of their business, right?
Yeah, basically everything is looking shaky except for cloud. Cloud is an absolute beast. Their cloud business grows legitimately like 38% per quarter, every single quarter. It's like a joke. I mean, year over year. But the growth rate on AWS is like it's like a clock. It doesn't stop.
I know.
Yeah, Jay Rice is agreeing with what I was saying. Yeah, everything besides cloud is sort of a little murky right now.
So, yeah, but Amazon has people love Amazon because of its, you order something and it's at your place the next day. You order a little like phone case and it's at your door the next day. They take that away.
Well, I only use Wish for my e-commerce.
Oh my God. Wish. Luke loves Wish, by the way.
I know.
That's all. Luke gets all his clothes from Wish.
I know. Luke does shop at Wish. It's shameful. Anyway, Amazon. Sorry.
And if they take that away, like if they're like, oh, hey, maybe us shipping a, half-pound phone case halfway across the country in 12 hours.
Cheap.
It's not cheap. It's not worth it for us to do. If they do that, like, people are going to fall out of love with Amazon. So they kind of need to at this point because they've gotten people accustomed to it. They've gotten people accustomed to that ease, but it's not really a good business model. Like we've seen their margins aren't strong. Like Jay Rice is saying, everywhere except for AWS. And as far as competitors to AWS,
there are no. Well, no, that's not true.
You have Microsoft with Azure.
Yeah, you got the Azure. You can even throw in like an Oracle in there. Their cloud business is very small comparatively speaking, but it is out there.
Yeah.
So
Amazon, it's not like they're not investors. They're like the biggest. So
yeah. I'd still like being bearish Amazon. Like when does that ever?
No, you can't.
When does it ever really work?
You can't long term, but I do think that like this was the quarter that some of these problems got exposed, and they're not just like little problems.
No, they're definitely not. And then there's Joel was focused on the real estate thing this morning because they had to go ham on the real estate to catch up to the demand during COVID, and now that demand's pulling back, they're all they're stuck with this all this expansion, all these new warehouses that they had no choice but to invest in, and now there's no really demand has come back down to earth. So there's a lot not to like here. There's a lot not to like on the Amazon front. But I would just say, hey, congrats if you bought this stock. You could buy this stock today at the same price you bought it last summer, right? So short term is probably just more pain, but long term, I don't know how you turn around and how you just get bearish Amazon. It's Amazon. They will figure it out. All right. Let's do this. We're gonna have our first guest of the day on in like a minute. Before we do, let's get the likes up a little bit more than they're at right now. We want to get to like a 75% liked viewer ratio. So let's get a few more likes. Smash that like button as the graphic on the screen there it is. As the graphic on the screen indicates right now, just hit the thumbs up wherever you're watching us. YouTube, Twitch, Twitter. If you're watching us on Facebook, you can like us there too. Yeah, everyone hates Facebook, but we're still on Facebook. Okay, that's all I want to say, I think. Oh, the Bezos return. Great point, Dante.
Yeah, so someone was pointing that out, that if you look at the chart, like you can see kind of where maybe Bezos knew about some of these long-term problems and just kind of like got out when he did and
maybe
left someone else to deal with it.
Maybe, you never know. All right. I'm very excited for our first guest here. As we said earlier, probably the largest company we've had on this show. I would presume. We're talking to
very big deal.
Very, very big deal. I think that's fair to say. We're talking to the CFO of Qualcomm, and if you guys don't know the context here, let me just pull the chart up on the screen, and we can just kind of go from there. Here's the weekly. That's too far out there. Let's just go to a daily. No, let's go to a 15-minute. Okay, this company just blew it away. Their earnings report from Wednesday after the close just absolutely crushed it. Okay, in an environment that is not easy for technology providers, as you've all heard. So without further ado, let's bring on Akash Palkhiwala, the CFO of Qualcomm. Where's our intro video? We got it. There he is, Akash. Welcome to Benzinga Live.
Hey, Spencer. How are you? Thanks for having me.
Thanks for joining us. We had that video custom made.
Yeah, those are great pics. I don't know where you got those from.
We stole them. All right, Akash, I want to start before we talk about the quarter here. When you and I last spoke, you gave me a really good rundown and like a really great overview of Qualcomm's business and the different arms of it and where the growth is coming from. Can you just do that again? Because I think it was really great information.
Yeah, sure. That'd be great. So we're very excited about where we are as a company. We started off, our heritage is in mobile phones. And as a result of it, what we've done is we've ended up developing a whole set of technologies that are required for you to be good in phones. It's 4G, 5G, Wi-Fi, Bluetooth, GPS, CPU, GPU, AI, camera, audio, video. We have just all this technology. And where we are at, just as a world, is we're going through this digital transformation. And that's happening to all industries. It's happening to consumer devices. And Qualcomm is in this unique position to connect everything to the cloud. So you have Azure and AWS on the cloud side, but you need silicon on the device side to connect to the cloud. So if you want to connect a car to the cloud, if you want to connect a tractor to the cloud, if you want to connect a retail equipment store equipment to the cloud, we are the company that can do that. We have the right wireless technology, we have the right processing technology, and we have the right AI technology. And so we're the cloud connecting company, and that's kind of who we are.
Let's talk about where the growth is coming from. I suppose we should probably start with. I mean, everything kind of came in above estimates, but we should probably start with, I guess, the two like sexy areas, right? Are IoT and automotive, right? So let's go into each of those right now. Maybe we'll start with Internet of Things. Talk about that segment of your business here, and I mean, I'm looking at the presentation right now. I'll bring it up on the screen. 50% year-over-year revenue growth across
Wow.
your IoT business. What goes into that?
Yeah, IoT is just a very broad opportunity for us, and it goes back to the digital transformation comment I made. Pretty much everything is getting connected to the cloud, and we are being the enabler of that trend. If you look at the revenue growth we delivered this quarter, we had 1.7 billion in revenue, which was up 61% on a year-over-year basis. And when you break IoT down into kind of logical buckets of how we talk about it, it's three different things. There's consumer IoT, which is different kinds of consumer devices, tablets, PCs, XR, metaverse devices, all getting connected to the cloud. The second is edge networking, which is Wi-Fi access points and 5G wireless broadband devices. And then finally, industrial, which is a whole set of industries, whether it's retail, healthcare, transportation, manufacturing. Everything's getting connected to the cloud, and we're enabling that. Each of those three areas grew by greater than 50% individually. And as we look forward, we almost think of the opportunity in front of us as limitless. As hundreds of millions and billions of devices get connected to the cloud, we can be the chip company that enables that.
So is the expectation here for that 50% growth rate to keep up?
Yeah, we're very excited about what's in front of us. We at Investor Day last November, we gave a very specific forecast. We want the revenue to go up to 9 billion in the next couple of years. But this is an area where you could easily have upside opportunity on top of it. There's a lot of exciting trends in our favor, and as the metaverse happens, as Windows on ARM happens, and all the industry transformation happens, we could do a lot better. And it's not just a couple years growth curve. We think of it as a 5-10 year growth curve for us.
There are several questions in our chat about the automotive push right now. So what's going on there? What's behind that growth? And then we got a question about somebody wants to know which automotives are you working in?
Absolutely. So automotive, as you know well, the industry is going through tremendous transformation, and it's not just about electrification, which is definitely happening, but in addition to that, cars are effectively becoming PCs or phones on wheels. And what's driving that are three separate things. First is every car is getting connected to the cloud, and we can bring technology from the phone and enable that. Second is the digital experience inside the car, the way the dashboard works, the way the infotainment system works, is completely being transformed. And then the third is there is obviously autonomous driving and move towards it by adding several features across the board to enable assisted driving for passenger cars. And we're enabling all three of them. And the way we think about it is we bring the digital chassis to the OEMs. And the digital chassis is, you have the physical chassis in the car. The digital chassis is a combination of all these solutions that talks to each other, that's scalable from low tier cars to highest tier cars, that's scalable from level 1 autonomous driving to level 3+ autonomous driving. So we have just tremendous amount of scale, and we're bringing it to all our OEMs. Recently, we announced that we're working with BMW on ADAS. We also announced that we're working with GM. GM uses our solution for their ADAS ADAS applications as well. And really, the number of OEMs, every single major OEM is a customer of ours in the auto industry. And again, we're at the front end of a 10-year growth curve for us.
Yeah. So, and in terms of like the legacy part of your business, can you just address that again real fast?
Yeah, the legacy part of the automotive business was cloud connectivity. We put 4G and 5G modems in the car, but now we've extended that to digital cockpit, and we've extended that to ADAS.
So I think one of the reasons that maybe I personally was surprised, and it seems like maybe some people on the street were surprised too, as evidenced by the stock reaction, was it's a tough environment right now to be a company like yours. Apple addressed it yesterday. A lot of companies, a lot of maybe your smaller peers in the last couple of weeks seem to attempt to get out ahead of, global supply chain shortages and just said, yeah, we're still having problems, right? There's still a global shortage of supply chains, and it's demand is not a problem, supply is a problem. Against that backdrop, how have you navigated that?
Sure. So, Spencer, we started talking about supply constraints much before anyone else in the industry. We were able to foresee that we're going to end up at a tougher place. And the advantage of that was that we had a chance and we had time to put in actions in place that would resolve the problem to a large extent. And so we've been doing that for the last 12 months. And you're seeing some of that benefit show up. We have significantly improved supply coming in from both Samsung and TSMC, our two major foundry partners. And that's showing up in our numbers. Better performance in terms of the actuals. We came in significantly higher than our guidance. Our guidance midpoint was $2.90 for the March quarter. We came in at $3.21. And then we're guiding significantly ahead for the June quarter as well. And so that's we're very excited about how we've navigated that challenge. As we look forward, we're continuing to expect supply to improve over the next 6 to 9 months, and maybe supply demand gets to a balanced situation by the end of the year, but we'll see how it plays out.
Something I've always wanted to know on the guidance topic, right? And you're a CFO, so you're as good a person to ask as anyone. Is like, guidance, all it really does is it sets expectations, right? And it tells us what to expect going forward. How much when you're, coming up with your guidance numbers and your projections for the year and you're sharing those publicly, how much of that is like in that conversation, like, do you think about, okay, do we want to maybe skew conservative so that maybe we can clear that bar a little easier? Or do we want to really go all out, skew, give a really aggressive guidance number, show that we're like super gung ho here? Like, do you think about that when you're coming up with your forward-looking projections?
Yeah, that's a great question. I think the way our philosophy plays out is we want to be consistent in the way we approach guidance. And so we are doing exactly what we've done for the last several quarters. And so consistency is very important. Second is we want to be transparent with the investors. And
Right.
So underlying philosophy of how we guide and how we've always done it is those two principles. And we'll continue to do that. I think that's the best thing we can do for the investors. And I think that's the best thing we can do for the company as well.
Awesome. If there are any questions from the chat, guys, don't be shy. Seriously. I feel like you wanted to jump in as well.
Yeah. So Akash, I'm curious with as far as consumers' recognition of the Qualcomm brand, right? I think before we hopped on, I just happened to see a commercial on CNBC for Qualcomm. It's one of those things to me that's kind of, we have a phrase around here, the thing behind the thing. Like you said, the possibilities are endless with what we're connecting now to the cloud, right? Cars, refrigerators, you name it. But I feel like a lot of customers may be using things with Qualcomm technology in them and not ever know it. Is that a thing that you guys have discussed?
Yeah, so we've used a very interesting approach as an ingredient brand in consumer products. We've focused on certain geographies. As an example, if you look at the Snapdragon brand in China, which is our consumer brand, it's an extremely strong brand, and it's something that all of our customers use, just like Intel Inside in PCs in the US. Snapdragon is a very strong ingredient brand in China. You'll also see in other markets like India and now emerging in Europe as well, Snapdragon has become a very powerful consumer brand. And it's associated with strong technology, 5G leadership, and processing leadership that really is worthy of the products that we've been delivering. So you'll see more of it going forward. We think there's an opportunity to further expand from a geography perspective.
Awesome. Thank you.
Crypto Hunter wants to know if you're looking into robotics at all.
Yeah, so that's a great question. One of the advantages of the technology we've built in phones is it applies directly to robotics. So if you look online, you'll be able to find a robotics platform that we offer, which is a set of chips put in a module with software and tools that can be used to enable various robotics devices. I mean, if you look at the Pixie platform that Snap announced yesterday, that's a drone that follows you and take pictures. That's a great example of someone using our chip to do something that's very, very cool from consumer perspective.
And then Brent from our news desk wants to know what you think the most like envelope pushing part of IoT is.
Well, I mean, certainly metaverse is at the top of that list from a technology perspective. There's a lot of hard science problems that need to get solved, especially if you look at a form factor like the glasses that Spencer, you and I are wearing. It's pretty unforgiving form factor. You got to put in a bunch of technology in a very small area with low power, small space to put in a battery. And then we're excited about that. I mean, the harder the problems are, the more significant Qualcomm's advantages. And so we are hard at work to try to solve that problem for our partners.
All right, the questions are really flying in now. We're not going to be able to get to all of these.
Yeah, here's a good one.
Okay.
If there are a limited number of chips available for OEMs, how does Qualcomm choose who to sell to? Are there legacy OEMs viewed as a priority customer over startups such as Lucid, Arrival, and VinFast?
Damn, Zoltan. That's a good.
I think it was actually from.
Where did that question come from?
It came from Edwin.
It came from Edwin. Okay.
It's been a challenge. I think it's when you have constraints on the supply side, it usually is difficult to pick between customers. The first decision we really have to make is what tier chips we want to build. And so what we've been trying to do is focus on the most important parts of our businesses, which are premium and high tier smartphones, automotive, and leading edge IoT devices. And so those are the places that we've focused our supply. And I think it's worked out well for us. That's the most profitable part of our business. It's also the most sustainable and largest growth opportunity for us in the long term.
I'm just going through the chat here because we don't want to keep you too much longer, but I want to get to a couple more questions. Does Qualcomm get involved in battery development in Trade Green?
We don't directly do battery development, but it's definitely something we work with our partners on.
All right. And then,
are you guys currently partnered with Taiwan Semi for manufacturing?
Yeah, absolutely. We have two key partners on the foundry side, which is Samsung and TSMC, and we work with both very, very closely. They've been great partners to us, and they've worked well with us in tough situations, and they'll continue to be important for us going forward.
You mentioned earlier that Qualcomm was one of the first to or the first in the industry to foresee some issues on the supply side. Have you seen any kind of easing from those manufacturers, from Samsung, from TSMC, kind of on their supply side? Are they in better position than they were a few months ago?
Yeah, they've been working very closely with us. They've scaled their manufacturing up to the extent they can, and they're continuing to do so. I mean, if you look at the amount of capital expenditures each of those companies are looking to spend to make sure they keep up with the demand for silicon manufacturing, it's just staggering numbers. And so we're grateful that they've been investing with us trying to resolve these problems.
Ajit Patel wants to know, at what point do you feel non-handset will exceed handset revenue?
Our non-handset area has been growing tremendously fast, but the good problem we have is handset has been growing very fast as well. As an example, this year, we're expecting greater than 50% growth in our handset revenue. So we want those ratios to change in favor of non-handsets, but we're struggling with the fact that handsets are growing as fast as everything else.
And then just to wrap it up here, there's a couple questions. I think this one sums it up. It sums up the sentiment at least. Qualcomm stock is not reflecting the magic of its performance. Any reason for that? Your take?
Yeah, from my perspective, I think we're doing everything we said we'd be doing. The investors, just a very significant amount of positive feedback that we're delivering on the commitments we made, and we're doing even better on several areas than what we had expected to. So stay tuned. I think there's a tremendous opportunity for us our stock to go up and see the benefits for the investors.
Okay, I lied. This is going to be the last one from Alex. Sorry, this just came in. Do you worry about a supply glut in the coming years, given the fact that every semi-manufacturer is increasing CapEx?
I think when you step back and do a 5-year, 10-year view out, the amount of silicon that is going to be needed to connect everything to the cloud is just a staggering amount of additional capacity will be required based on that. So there might be pockets over the next several years, but just if you look at the long-term trend, I think we need the additional spend to increase the capacity of the industry for what's coming up.
Got it. Akash Palkhiwala is the CFO of Qualcomm. Akash, it has been a pleasure to talk with you today. And hey, go Terps. You and I both went to Maryland, so go Terps. And
awesome. Go Terps.
And thanks for coming on today. Really appreciate it.
Have a good one. Take care.
All righty.
Thank you,
Akash. That was a lot of fun. Man, the chat was flying. I'm sorry, guys. I'm sorry we couldn't get through all of them. We kept them for 17 minutes. It's a pretty long time, I feel like, for a CFO interview. So some fantastic questions, by the way. Like some of those questions were better than our questions, frankly, which is okay.
Well, okay.
Some of those questions were incredible.
Edwin had an unfair advantage because he was going straight CFO to CFO.
Dude, I know. Yeah.
That's like,
that was so insightful. Can I steal your charger?
You say please?
Please.
Yeah.
Thanks. But also, like, that's also why we do this, right? It's not so much as it is for us to get questions. It's for you guys as well. Like, we like it when the chat is engaging and asking questions. That it's more fun, right? And how often do you like you can't like chat in or call into CNBC, right, and ask a question?
Sometimes Kramer, when it says like Bob from Mississippi.
Yeah, but that's like 3 people a day, man.
Yeah.
We just did like 10 questions right there all from the chat. So bravo to all you. Some of those questions were really insightful. I always appreciate the questions whenever we get asked, like ask them about their stock. Like we just did, like, we'll do it. But like part of me feels bad because like they're as much at the mercy of the market as everybody else is, right?
Well, yeah, that's the thing. I mean, like we asked him about, like, he could have easily just said, we're seen as a tech growth stock, and that's been weak in the overall market. So that's what, it doesn't matter what they've been doing. And that's what makes investing in individual names so tough, is that at the end of the day, there's so many macro headwinds and tailwinds that will dictate the price of an asset more so than that company's like individual performance, right?
Yeah.
Like if growth and everything was in favor right now,
Qualcomm all-time highs.
well,
Maybe.
or
stocks like it.
Well, Apple right now after Apple's earnings report would be up 5%, but that's just not what's in favor right now. So
spoiler alert: nothing is in favor right now.
Well, you always
is oil up today? Probably.
You always have pockets of strength. What stock were we looking at yesterday that was making new 52-week highs?
No. The only stocks making new 52-week highs,
like inverse into ETFs.
They're all like random, like boring consumer staple stocks.
Right.
Yeah.
So that's where strength is right now. People go in it.
It's funny. That's funny, man.
Yeah.
Yeah. No. I come on. Qualcomm trades what, like 10 million? How many shares a day does Qualcomm trade? I'm not.
Yeah, like Coca-Cola's at like right up near 52-week highs.
Qualcomm has traded 31 million shares already. I'm not moving Qualcomm.
But that's what that's why it makes sense why some of these like Coca-Colas that are at 52-week highs are more expensive, quote unquote, talking about in terms of PE, whatever, not the actual share price, more expensive than your Apples or Facebooks, is because that's where investors know their money is safe. They know Coca-Cola's not going to crash. People aren't going to go stop drinking Coke tomorrow.
Yeah.
Even if we do keep seeing inflation, even if there is a downturn in growth in the economy, it's more safe than something like a MacBook Pro that's $1,200. That if we do get that downturn in the economy, people aren't gonna be able to afford that. People are still gonna be able to afford their Coca-Cola.
That's it. So if you want more interviews like that, do us a solid, smash that like. We do these shows for free, and a like is how you can help support us. If you want to support us even more, you can subscribe to Benzinga on YouTube. You can click that join button, become a member, get access to custom emojis. Or if you really want to support us, help us out, check out Benzinga Pro. Get a free 2-week trial, pro.benzinga.com. It's our real-time news and research platform, and it's where I did my research for that interview right there. So pro.benzinga.com. And hey, there's a special link in the description of this video that will get you a discount to Benzinga Pro right off the top, to a 25% discount. That link that's on the screen, it's clickable in the description. So check it out right there. Get 25% off your Benzinga Pro subscription. All right. That was a lot of fun. I was looking forward to that one like all week. I want to talk about what I did this morning.
Oh, yeah. We never talked about that.
So I saw this headline yesterday. All right.
Yeah, born to be. That's kind of why I asked about TSM. Yeah. Headline.
Wait, what TSM? Oh, the TSM. Yeah. Well, TSM is the one that came out and said they like pre-warned. They were like, it's going to be bad. Right. So
TSM though, I wanted to talk to Akash more about the relationship with TSM. I just felt bad asking him about like another company. Like he's here to speak about Qualcomm, not TSM. But TSM's so interesting because they manufacture for every single there's like it's like a duopoly, right? Akash just said Samsung and Taiwan, but like they manufacture for AMD. They manufacture for NVIDIA. So like they're a shovel play for the industry. And so the fact that it's so beaten down, like, and you heard Akash say the demand for chips is just staggering. It's like any demand in chips is going to benefit, any increase in the demand of chips is going to benefit TSM directly because they're the only ones that manufacture for all these guys.
Yeah.
I like the demand's there. So the stock, you have to assume, is going to come back at some point. So I think it's interesting. I'm not ready to make that call yet.
Oh, something else that just occurred to me we could have asked him in light of what Amazon is dealing with, because Amazon had to expand capacity rapidly to account for increased demand, and now that demand is contracting, they're stuck. I wonder if I guess we kind of did ask that question. Actually, that was the last question we asked there, so never mind. All right, I saw this headline yesterday. All right, and it was AAII sentiment survey, highest level of pessimism since March 2009. I saw that and I was like, I've heard of this AAII survey before. What the heck is it?
Okay.
What is AAII? I
have a feeling you're going to tell me.
I have no idea. What is it, like a company? Is it like a So I did what I do and I went to the Google machine, right? And I went to AAII.com. And I saw, oh, okay, the American Association of Individual Investors. How does one vote? Like how do you become eligible to participate in this survey? And it says it right there on the screen. It says, oh wait, all members are eligible to participate in the survey.
Hell yeah.
And I was like, oh, a member. I could do that.
Hell yeah.
How much is a membership? So I bought a membership this morning.
Okay.
All right. It's $2 for the first month.
Okay.
All right. So I am, as of this morning, I am a member of the American Association of Individual Investors. Let me bring up my screen up there. Okay. So I already kind of skipped past the first one, but the very first question is, are you bullish or bearish or neutral?
Okay.
So I click neutral. Okay. And then this is the next question. Do you think other investors are too bullish or bearish right now? Please include a brief explanation with your answer. So what do I say here? I mean, I guess you guys can't. Well, what should I write?
You should say, I think people are being too bearish.
Bearish. The market has been largely range bound this year, and I think it will continue to be so. I'm gonna go with that.
There you go.
Is that English? All right, submit.
Congrats, Spence.
Boom! I just participated in the AAII sentiment survey. I'm doing my part. Look at all this bearishness. Okay.
Are you doing your part?
I'm doing my part to bring us back to neutral. I'm not quite bullish, but I'm trying to bring us back to neutral here. So this is for the week ending Oh, they do it every Wednesday, looks like. So cool. So next Wednesday, we'll get a new survey out that my response will be in, and I'm gonna try to influence. Let's see how much influence I have.
I love it, Spencer.
Yeah.
Great job.
Yeah. Just remind me, please, somebody, remind me to cancel my membership because it auto renews for like $200, and I don't want
For
to
a year, that's like the annual.
Yes.
Damn.
So just somebody remind me in like 29 days. I got to cancel my membership before it auto renews because I don't want to actually be a member for the whole year. I just wanted to. Thank you, Born to Be Free. Yeah, I'd seen it there as well. Okay, I thought that was cool. I'm a surveyor, surveyee. I don't know. All right, 12:27 here. Is Tim Quast joining us today? I hope so.
I shot him the links, albeit.
It feels like a month since I've spoken to Tim.
Really?
I mean, it was on Monday, but it doesn't feel like it was.
I shot him the links. I was gonna say, albeit pretty late, so I wouldn't be surprised if he's like on a bike ride or doing something cool.
Dude, my Tim Quast is my goal, like in life. Is to live like that.
He just travels around cool places, eats good food, drinks good beer.
Yeah, he was in the Caribbean last week, and also he lives in like an amazing place where we live. I mean, Michigan's cool, but like it's too flat here. You know what I'm saying?
He is like full time in Colorado, right?
Yeah, he's all about that Colorado life, which is cool. All right, hey, you know what we haven't mentioned yet today? The FinTwit conference. We're 2 weeks out. 2 weeks from today.
Y'all gotta come.
You gotta come.
You gotta come.
If you don't know what I'm talking about,
wait, Trade Green, does the membership really have privileges?
Yeah, I got to vote. That's what he's saying.
No, that can't be it. Or even like AARP, you get like hotel deals or something.
By the way, my parents are in AARP.
You know, anyone can join. You don't have to be like above 55.
Really?
I think they changed it.
I knew my parents were getting old when I started. They started getting the magazines like.
No, I had a teacher who like joked about it. He's like, "Oh, I turned 55. I guess I'm joining AARP." But then he was like talking about it, and like it's a no-brainer. You literally get like 10% off at like all these different like.
Really?
You just like save money. Yeah.
Okay.
I don't know. Maybe we have an AARP member out there in the chat. But I also heard, and I saw this on Twitter, so I don't know how true it is, that like
definitely true.
Anyone, like you can be like 25 and go join AARP just for the deals and shit.
Dante says at 18? What are we doing, Aaron?
I think we should.
We got to get an AARP.
Someone asked me, did I ever get my bank issue sorted out? I honestly don't know what that's referring to.
Wait. On this note, and we're getting way off topic here, but I want Nate Kozowski.
No, I don't. You can't.
No, I want to get him on the show. I want him to come on the show.
Oh man,
okay?
I don't know if that's something he wanted me to like. You know?
Well, you told me. Nate Kozowski, if you're out there at Benzinga, I want you to come on this show and talk to us about your banking situation. Okay.
Wait. So Phil saying no.
If you're out there,
Phil saying no, you can't. But Dante saying I'm 21. It's so worth it. Phil, I'm pretty sure they changed it. I'm pretty sure like for like many years it was strict. You had to be 55 or 60 or whatever it was, and then they were like, you know what? We can collect membership dues from a lot. Oh, yeah. It wasn't even an issue. Basically, what happened was they sent me mail to my house in St. Louis that got sent back to them. Because I set up like a mail redirect thing, and the UPS like USPS stopped redirecting my mail, so now they're just sending shit back to the sender instead of to my new address, which is frustrating.
Anyway,
so Phil's still saying no AARPs.
Somebody's lying.
Yeah, either Dante's not really in the AARP,
or Phil was just a troll.
I don't know. I'm done with the AARP.
Anyway,
but let me know the benefits if anyone actually knows.
Whether or not you're in AARP, you should come to the FinTwit Summit in 2 weeks. Fintwit2022.com. The URL is up there on the screen. If you use the code that I am putting in the chat right now, or it's a special link. Sorry, it's not a code. It's a special link. If you give me 1 second though to find it. If you use this link, it'll get you $200 off right off the bat. I just pasted it in the chat. Use that special link, the Bitly link, that gets you $200 off. Why am I promoting two discount codes? Because I was given that special new discount link yesterday. I was given the $200 discount code yesterday. It was new, so that's why I'm promoting it now, because I didn't know about it. I didn't know about it before yesterday. So use this link if you're in the chat. Use that link to get $200 off your ticket.
It comes if you buy a ticket, you get one free
slap at Aaron Bree. What?
No, that's only the VIP. That's only the inner circle.
The inner circle gets that. No.
The GA ticket gets one free AB sports bet pick while we're out in Vegas, where it's legal. Bet on sports.
What's legal here too?
I know, but like not everyone in our audience watching right now might not be in a state where it's legal to gamble, but in Las Vegas, Nevada, it's long been legal actually. It's at 12:45, 1 ish.
All right, guys. I'm moving on from the AARP thing. Sorry, that was fun. But let's
wait. Are people still arguing about it?
Yeah, let's move on. I'm moving on. We're moving on. All right, at 1:00, we're gonna have Gabe Karp on, but we're also gonna have to be watching the market closely, I suspect, because Miss Kathy Wood will be on CNBC at 1:00, so we're gonna have to.
Oh, Kathy! She bought more Teledoc. Do you see that? And she sold.
Aaron, I must be the only person alive that actually thought that there is no way she's gonna buy more Teledoc yesterday. I honestly thought that.
I honestly thought there was a chance like her fund was gonna blow up yesterday when her second biggest holding was down like 30%. And Tesla,
I honestly thought
Tesla's also been down. Dude, I feel really bad actually. I don't feel bad for Kathy Wood, but it's like, dude, I saw a chart of ARK overlaid over SPY over the last 5 years. And at one,
all right, SPY is not the benchmark, but to be clear, but all right, keep going.
But at one point, ARK was like 500% like above SPY, you know, just like outperforming the market like crazy, and has come all the way back down to where now SPY has outperformed ARK over the last 5 years.
I want to drop this link in the chat. I tweeted out, or I retweeted out this thread last night, and I thought it was a really good kind of level-headed analysis of ARK and Kathy. It was from a guy who I had never heard of. I didn't follow him before yesterday, but I'm gonna put this link in the chat. It's one of those Twitter threads, which, by the way, Twitter threads are really starting to piss me off in general, but really good thread, I thought, in about ARK and Invest as a whole. I don't know if you remember this last year, there was some drama with regards to like who owns ARK. Like Kathy bought out one of the owners of ARK. Check out that thread. It was a pretty good take, I thought. Was not Kathy bashing at all. And just in case it needs to be said, I still own ARKW. I made a decision about 6 months ago that I was gonna ride this thing till the end. ARKW is about 1.5% of my overall Fidelity portfolio. It used to be, a lot more than that, obviously, but it's down to 1.5% now. It is a small slice of the pie. I'm going to hold this thing, ride or die, okay? I'm not going to get rich, and I'm not going to go broke off ARKW. I was never going to do that. I never owned enough to get rich in the first place. But I'm going to ride this thing till I die. So I don't even know if I'm bullish anymore, but that's not. This is going to be a good lesson for me, I think, in just owning hyper growth investments and I want to hold it through multiple cycles. So we just went through a crazy growth cycle. Now we're in like anti-growth, and I'm going to hold this thing for as long as it's out there. I'm going to say that. And I just want to see what happens. Okay, I'm not going to get rich. I'm not going to go broke, but I'm going to hold ARKW, however small it gets. Yep, I'm
You're
down.
going down with the ship. That's very admirable of you.
I'm going down. Well, I wouldn't even call it a ship. It's like a tugboat, because it's like such a small like it would be one thing if I had like half my money in ARK. I would be pissed, and I would have sold months ago. But I don't have that much money in ARK. For the same reason I'm in this thing with SoFi, right? SoFi is like, it's the same size as ARK, frankly. I got like 2% of my portfolio in SoFi. So between ARK and SoFi, it's like 4%. Okay. I'm okay with suffering. I really am.
I could actually get talked into a long ARK play at some point soon.
Tiny Pie, maybe that's it. It's like 4 years of like horrible pain and then one epic year to get it all back. Perhaps. That's also, well, he wasn't negative. No, that's not true. So Crypto Hunter, I looked this up a few months ago. There's only since Warren Buffett bought Berkshire Hathaway in whatever 1967 or whatever that happened, there's only been one span of 3 years in a row where Warren Buffett underperformed the S&P 500. One span, 3-year span.
You just said that's not the benchmark.
No, for Kathy.
What's the benchmark for Kathy?
Like the NASDAQ.
Okay.
But for Warren Buffett, the S&P is the benchmark. So Warren Buffett, so your comment, while true, crypto, the overall market also sucked in the 2000s. So the benchmark also was bad. But Warren Buffett has been an absolute beast, and this kind of gets into the next segue, which is that Berkshire Hathaway annual meeting tomorrow. We will not be there, unfortunately, but we will be watching.
I would love to go.
I tried to go this year.
We should go next year because
Dude.
Warren Buffett's probably only got a couple more annual meetings left.
I know. He's got that was my thought process. That's why I bought. I'm not joking.
What the day
I bought one share for this exact reason.
if Warren Buffett dies on like a market day, what does the stock drop? Like a couple percent?
A couple? You think a couple?
Or like 10?
Yeah, this is a messed up thing to talk about, but
Well, I'm curious. Like obviously Warren Buffett's like older. He has like a succession plan in place.
Yep.
There are people at Berkshire that have been there for like 20 years as his like proteges. I think they'll be fine long term. I'm curious what the market reaction to the stock will be, because Berkshire Hathaway, for all intents and purposes, is like investing directly into Warren Buffett. That's why people buy it.
Yes. Well, there are a handful of companies out there that are where the CEO is more than just the CEO. He's the company, right? Elon Musk is Tesla.
Ooh, yeah, that would be.
If Elon Musk Elon Musk is Tesla,
really fucked up thing to talk about. But if you were talking about like stocks that would
I'm saying if he leaves, dude.
Yeah,
I'm not saying he's gonna die.
No, but I'm saying if.
Jeez,
we were talking about
get that out of your head. I'm saying if they leave, if Warren Buffett decides to step down tomorrow,
Warren Buffett decides to go to the farm where my
dude.
Why do you act like it's so crazy to talk about Warren Buffett dying when he's like 95? Like it's gonna happen like one of these days.
Yeah, but it's like a messed up thing to like yeah, you're gonna speak it into existence. I'm worried.
Oh my god, yeah. If that happens like tonight, I'll feel so bad.
Dude, come on, man. No, wait. Sorry, there's a question about. Do I think ARK could ever pull a Microsoft? I mean, that'd be great. Wouldn't it? Let's pull up the Microsoft thing here. So Microsoft was known for never getting back to its .com bubble peak until it did, and then it never looked back. Right? Like the people that bought Microsoft, 99, 2000, they were underwater for 15 years. But look at the last half decade, right? It's just been, obviously what had to happen here, right? It's not an accident. They had to pivot the whole company, right? The whole company pivoted into the cloud. And that's what's driven this growth. And that's cool. Maybe maybe Arc does this. I don't know, but like I really don't.
Microsoft, that was like all when what's his name, Patella came in.
Yeah, when Steve Ballmer stepped down, that was when the chains came off. So pretty remarkable.
Yeah, Alex, Microsoft's growth has been in large part because of their investment in the cloud space. They've basically we're spending more in R&D in the cloud space than even like Google back in those years, and it really paid off. But in those like mid 2000s years, the thing that really kept Microsoft afloat, or thing that helped a lot, was their gaming department, was Xbox.
Xbox?
Yeah.
Yeah.
Like like everything else was kind of, and then they stepped up and became even more a closer competitor with Sony, with PlayStation. I think even, well, actually, I don't know, because it goes like each iteration of the model, like one is preferred to the other, it feels like.
Yeah.
Like I think Xbox 360 was seen as better than the PlayStation 3, but then the Xbox
show of hands in the chat, who still plays old generation consoles? Like I have I have the OG Xbox still, and it were GameCube counts. Aaron Thomas.
What about PS4?
Sure. That because what are we up now? The
PS5.
We're at the 5. No, it does not count.
All right.
I'm talking like
I have a PS4.
Like PS3 came out when, like 02, 03, like 04, maybe 05. Like I'm talking like gaming systems from like a decade ago. I have my Xbox and it still works. Alex plays his PS1. That's impressive. That's from what, like the late 90s?
Christian Galler saying I have a PS4. I fire up every once in a while. That's literally like the only thing I have.
Super Nintendo is impressive as well.
I think I bought it in like 2017, so it's about 5 years old now.
Yeah.
But yeah, crypto hunter. That's what I'm talking about exactly. Windows Vista, like that time frame. Microsoft was kind of just not very competitive with other companies in its space, and hey, at least they still had Xbox. They had the second biggest or the biggest console.
Dude, I remember Vista. Oh my gosh.
Was that the one, like it went from like Windows 10 to Vista and like just like,
I don't remember the order, but I just remember it being bad.
Yeah.
Oh, wow. Look at Happy. Happy's got a regular freaking monopoly on the gaming systems here. He's got everything.
I haven't played a Wii in so long.
My parents have a Wii. Oh no, wait! I took it from them. I have a Wii that we don't use. Why would I use a Wii when
I remember when the Wii came out, trying to get it was impossible. You would call like a Best Buy and it would have like an automated thing when you called it that was like, we do not have any Wiis left or whatever. And then
Aaron, do you want to come on the show and talk about this?
No,
I feel like Aaron Thomas wants to come on the show.
I had the same exact experience. My older brother and I were like, it was impossible to find a Wii, and we finally did, and we sat in a line outside of Best Buy for like hours before we finally got one.
Hey, speaking of Best Buy, I haven't looked at that stock in a while. Not bad. Anyway, this was a fun conversation. We are going to have our next guest on in a couple of minutes here. We're talking to the head of Detroit Venture Partners in studio.
In studio. We love having in studio guests.
The rare in studio guest.
Who's the last in studio guest?
The last in studio guest. No, it was not Al Harrington. We had someone else a couple weeks ago, I feel like, and I don't remember who it was. Anyway, Gabe Karp is going to be on in a few minutes, and then do we know what Mark Moran's deal is? Is he going to join us today? Tim Quast. Tim Quast appears to be out doing Tim Quast things. I don't know where he's at. And then I did also.
He said, Tim Quast is going to hop on.
Oh, now?
Yeah, we'll get 10 minutes to Tim before Gabe. Yeah.
All right. Yeah. Why don't I'll go talk to Tim and you can mingle, and then you can come on with Gabe. I love how this show always, even on days when I do have a plan, the plan goes out the window like right away.
That's not what this show's about, right? So, bro, we're gonna talk some trade ideas. We'll talk the biggest headlines of the day, interact with the chat a little bit. Not about really having a set plan.
I like plans.
I know.
Yeah. Anyway, okay, wait. So I guess Tim is joining us in a few minutes. What else? Hey, I saw a thing from Shelly. Is this true? Is the Russian stock market open? Did anyone see that? I haven't been looking today. I've sort of been streaming all day. Is the Russian stock market open today? I mean, RSX ain't trading. So what would I have to search for to find it? How would I even know? Like, how would a US investor be able to? Yeah, I'm just going to the Google machine. No, I don't see anything about it being open.
About the Russian stock market.
Yeah.
How's the currency?
Oh no, it did. It did. It did reopen. Wait a minute. Sorry.
Is RSX? What are the funds we were looking at?
Oh, it's been reopened. Why do I care about this? This is not even new. Wait, what was the question? Sorry.
No, RSX still isn't trading.
Let's bring Tim Quast on. He is like fresh from a workout. Oh man, this is gonna be great.
Hell yeah.
Yes, Tim Quast. Wait,
I told you he was probably riding his bike somewhere in the mountains.
dude,
doing something cool.
You know he was just like shredding it up somewhere.
I know.
Right?
All right.
Yeah, here he is. What's up, Tim?
I feel some pressure.
Wait,
I should have come wiping myself down or something, you know.
where are you coming from right now?
Actually, I had a meeting, so it was just a boring meeting. Well, actually, it was very entertaining, I have to say, but that's a whole different story. But we will be riding bikes later today. It's
Okay.
It's kind of
Nice.
perfect in Denver right now. We just got the bikes back from Wheat Ridge Cyclery,
Okay.
and they're tuned and ready to go.
Nice. Awesome. All right. Well, I don't want to put you on the spot too bad. So, how are things? How have things been the past couple of days here for you in the markets in terms of supply and demand and all that jazz?
Perfect. Yeah. As you'll recall, on Market Structure Monday, Spencer, we talked about this. I said, this will be a wild up and down week. And there's a reason for it that has nothing to do with what everybody is talking about. It's not, the recession fears, and there are legitimate reasons for that. I think that the data are deteriorating, but that's not the cause. The cause is today, there are huge futures and options contracts that expire today that big institutions use.
End of the month.
Exactly. End of the month. This is the last trading day of the month. Every last trading day of every month, these things expire. If there's not much volatility during the month that leads into it, they're no big deal. But when there is big volatility, then both the investors and the banks who provide this service have challenges, particularly the banks. The banks will try to offload their risk associated, and I'll give you an example, traders, so that you can follow this. Let's suppose it's BlackRock, and BlackRock has $8 trillion tied to these things. That's roughly they have managed $11 trillion, or they did before the month began, right? So it's something less than that now, but. So it's a big number, right? So and then you're offloading your risk of what if there's volatility, or what if my portfolios don't track the measures? Goldman Sachs, we're going to hire you to make sure that all of that stuff is square by April 29. And then they pay Goldman Sachs a fee. And Goldman Sachs says, well, we estimate our risk on April 1, April Fool's Day, to be this. And then we get to April 29, and all of a sudden it's much larger. So then Goldman Sachs is buying stuff and selling stuff and shorting stuff, trying to get its risk mitigated. And all of us observers, we're all like, oh, the stock market's way up on great earnings and clarity from the Fed. Oh no, wait, they're way down because now we have no clarity from the Fed. We think it's going to be a 50, 75 basis point hike, and earnings are terrible.
I'm not guilty. I'm just going to say that I'm not guilty. Okay.
But so traders, this is your lesson. Here is your market structure lesson for Friday, April 29. When a month is volatile, be very careful about what you trade into the end of the month, because the market is going to move in ways you don't anticipate. And so thus knowing this now, beware. It's going to happen again in May. If May is an easy month, we won't have anything to worry about. And we can go easily into June, new month, new money, and everything works. But that's what's going on, Spencer. That is the cause. And you can't draw a rational conclusion from a market that is being driven by people trying to mitigate their exposure to risk. That's what's going on.
All right. I love how you always bring rationality to it. And you're always quick to say your whole thing is ignore the noise, look at the supply and demand, look at the options expirations. Yeah, and it's a lesson that is hard. It's hard, man. It's hard to ignore the noise because it's out it's distracting. I agree with you.
I've had my and so I personally have been using MarketStructureEdge since we launched it, right? Just before I started trading with Edge, before we launched it with you. We actually launched it with Benzinga in August of 2020. So
wow.
And now we have this thing dialed in. So between February 18, end of options expirations in February to present, I've had my best trading period. I mean, it always works to take gains and not chances, but it has been beautiful during this period of time to always go where supply and demand are diverging. If the market is rocky, buy things that are at 5 with declining supply, it will produce a return. If the market rises, go buy stuff with diverging supply and demand. I told people buy TGT. And then it goes down. Well, that's when you buy it. If we know that the intraday volatility in TGT target is 3% and it goes down 3% during the day, and you know that there's rising demand and falling supply in that stock, the likelihood that you produce a return in it is approaching 100%. And sure enough, that is what happens. So yesterday, right? If you bought and sold it yesterday, that was the time to do it. And once the math tells you to leave, and I could show you this, then you leave. And be careful around earnings. You don't know what stocks are going to do around earnings. You have to be aware of that. But it works beautifully to buy diverging supply and demand and to understand how much price moves intraday. We provide all that data to Edge users so that you will know that.
We are dropping here, just making new lows of the day in the overall market. So just for awareness, everyone.
Dow down 583. So and again, folks, this is unmeasurable. I told Edge users this morning that you look at investment in the market, it was down as of yesterday. The week as of yesterday was down 11%. It actually improved a little bit yesterday, but investment is down 7% week on week. Well, what's the market going to do if demand diminishes? It will decline. In addition to all the risk mitigating factors that I described. Well, you can know those things, and you should. You can't. The problem to me with what the pundits do all the time is we wake up and act like the market is just the same as it was yesterday, that there's a continuous thing going on. It's not how the market works. The market has epochs, periods, things that happen, benchmarks, and you should be aware of those. New months, options expirations in the middle of the month end, those are very important things, and you should know what the supply-demand balance is at each of those points so that you're not caught out. That's how you succeed trading in the markets today, folks. That's the way.
All right, Tim Quast, Market Structure Edge. Tim, we'll talk to you again on Monday for Market Structure Mondays. Have a great weekend, sir.
You too. See you guys.
All righty. All right. Let's move it along. We have our next guest here. Let's bring him on here in a moment. Before I bring him on, though, I see Jason Rasnick lurking backstage. Jay, you want to come on right now, or what? Or I could bring you on, or we could not bring you on. I'm gonna let Aaron take over here in a moment for me, and then look, there's Raz. What's up, man? I'm gonna hop on. Oh no, we can't hear you. Check your mic settings. Check your mic settings, and then I'm gonna hop off, and I'm gonna let Gabe.
Can you hear me now?
I do hear you now. Yeah.
Yeah. I have Luke. I have Luke here on. What's up, Luke? You're on live on video at the Benzinga show.
What's up, guys?
Wait, what is happening right now?
What's
Mr.
happening?
Jacoby.
Luke called me. I answered the phone. What do you mean? What happened?
Luke, you're in the office. Come on over to us. Why are you talking to Raz?
I did track you
we've been talking about getting video going again for months. I thought like now's the time.
Dude, I can't with you people.
I slacked you a couple days ago and said let's just actually get it going.
You know, Luke, the lack of clarity by you is unreal. You slacked. You said you. I'm assuming you mean me because I saw your Slack. But do you mean Spencer? Do you mean Aaron as well? You slacked? Like, be clear, please.
I mean, Jason Rasnick. It's like Jason Rasnick.
Thank you.
I can't hear anybody else if anybody else is talking.
I'm trying to talk to Luke, but
okay.
Yeah, I mean, that's just Luke. He doesn't do. You guys got to help me get Luke on the clarity game. You know.
So I'm trying to get Spencer to start doing more research before we do this, because before we started, he had mentioned we were talking about how we were going to have Gabe Karp on, and I got Gabe's book right here. We've got Gabe in the office. Spencer said, head of Detroit Venture Partners, which Gabe and I were chatting before, said that might not be exactly accurate. But I do have Gabe here. So Gabe, what is your...
This is not about Detroit Venture Partners. Who gives a shit?
Real title.
No, forget that. Let's talk about his freaking amazing book. I don't care.
Well, that's why he's here in the office. I've got it sitting here right here.
I like how Jason goes right at it. Yeah.
I mean, that's what I'm looking like. Come on, zoom in on the book. Is Rohan, Aaron, like the book I can barely see right now. More.
This is as close as I can. We need do we got a ceiling cam?
You got
Rohan?
Yeah.
Oh, we've got it.
By the way, I'm impressed with the operation here. There's a lot going on behind the camera.
I like the background. Oh, now they zoomed out. I want to see the book.
Well, right. I know, but he
zoomed out because I was talking.
Yeah, see, Gabe knows.
He's,
okay. So, Aaron, hold the book up in front a little more further. Nope. I can't even get the kid out. There we go. Almost there. All right. Don't get mad at penguins. Okay. Now we got it. Now, what's it say underneath it?
It says underneath it, and other ways to detox the conflict in your life and business.
All right. Now, open the book. Keep the zoom. Don't mess with the zoom. Open the book. Go to page like 3 or something.
Page 2.
Page 2.
Okay.
Yeah, crypto hunter.
Oh my. That's so, dude. Raz, they got a quote in here from Robert Wolf, the CEO of Moose Jaw.
That's good, Aaron. That's good.
And CrowdRise. He's the CEO of Moose Jaw and CrowdRise.
Okay, Aaron. What else? Who else do they have a quote by?
Business building is impossible.com.
Well, I don't care about his
adherence. Jason Rasnick, founder and chief zinger at Benzinga, and a 2021 E&Y Entrepreneur of the Year.
Can you turn the book so we can see the quote?
Can we get we would need an ultra zoom in here. It's the bottom one. I'm
not as verbose as Robert Wolf. That's true.
There we go. So close.
We got it. Okay.
And then show him whose company he's in. Show some of the other quotes. Flip the page.
The company that Raz is in, we're looking at Jay Farner, CEO of Rocket Companies, Eric Lefkowski, the co-founder and chairman of Groupon. And then we've got Andy Friedman, the CEO of Skinny Pop. I love that popcorn.
And founder and
former CEO of Skinny Pop. Yep.
So what I was going to say is this is a book, Aaron Bree. I'm sad that Spencer Israel left because this is going to appeal to him as well. And basically anyone that's listening. And I see that Steve Delaney just bought the book on Audible. Do you already have an audio version?
Yeah.
Is it you?
Yeah, the audiobook is out. Morgan Freeman was unavailable, so I had to narrate the book in the studio for the audiobook. Available on audio, Audible, audiobooks.com, Apple Music, anywhere books are sold. Like how I'm pitching that? I got to say, Jason, you texted me a picture of your wife reading the book on the beach. That's awesome. That's an endorsement.
Well, that was cool. And the reason is, like, guys, this book's about embracing conflict resolution. Okay. So embracing conflict resolution. It's something that is so important, and we hide from it because we're not always honest with each other, which creates even more problems. So before we go into all that, why is the book named, what are penguins and how does it relate? And it's in the book, but I just want to steal that part.
Sure. So the penguin analogy makes a lot more sense when you get to that point in the book, because there's a lot of foundation to it. But in the big picture, think about this, like between expectation and reality is a space filled with conflict and suffering. And the wider that space is, the greater our suffering is. So the penguin analogy is really a lesson in acceptance. And essentially what it means is that we should accept people for who they are with all of their limitations, and not expect them to do things that are beyond their ability, even though we may like really, really want them to. And one of the challenges is that sometimes it's hard to see someone's limitations, especially when everything else we know about that person suggests that they're not limited. So take a penguin, for example. What do you mean a penguin can't fly? It's a bird. It's got wings. It's got feathers. And birds with wings and feathers can fly, except that penguins can't. And we can choose to get mad at that, or we can accept it. So you can apply that analogy to any kind of individual relationship, a personal relationship. Maybe you have a friend who's like always late, no matter how important it is to you that they be on time. Only the next time you expect that they're not going to be late. Or sometimes you have a friend who maybe gives you a little dig, gets a little negative every time you have some good news to share. Yet you continue to expect that the next time you have some good news to share, he'll celebrate and enjoy the moment with you. And that's the expectation. But if we think about it, we know the reality is something different. Because if you do have one of those friends, maybe he's one of those people that just like isn't wired for happiness and it has nothing to do with you. So the next time you got some good news to share and he gets a little annoyed or frustrated or gets negative about it, don't get mad. Don't take it personally. It's not his fault that he's not capable of being happy for you. It's got nothing to do with you. He's not even capable of being happy for himself. And getting mad at him for that is like getting mad at a penguin because it can't fly.
Exactly. And so so I bought this book for a few people at Benzinga as well, because I'm for a radical candor, and I am, I'm for radical candor, but I'm also for on both sides, not just for me, from others. I know there's people frustrated with me for something, and I got a text from this guy, Andrew Leba, saying, I didn't like how you said that, and others don't either. That kills me, because if someone didn't like what I said or what have you, then they should confront me about it versus going to someone else, because then you don't solve things. What do you suggest there? How do you conflict resolution in that area?
Yeah. So I would say what kills you about that the way you phrased it is interesting. Because you said, well, that kills me because if they didn't like what I said, they should come to me. You're right, but you shouldn't get mad or frustrated at them for not coming to you. You should really think about, why aren't they coming to you? And there might be really good reasons that they're not. Maybe they don't like coming to you because it's a pain in the ass to tell Jason that he said something they don't like because they don't like the way he reacts. So I'd say one way to deal with it. And by the way, I used to have that problem. I once had someone was working on my team, and I knew this woman really well. And I said to her, hey, by the way, in like a check-in, how are things going with us? How's our relationship? I'm sure there are things I'm doing that you'd rather I not, or I'm sure there are things you'd like me to do that I'm not doing. So tell me. And she said, no, everything's great. And I said, come on, no one's perfect. I know I'm not perfect. And she said, no, seriously, if there was something wrong, I would tell you. And I ended up saying to her, look, I don't want to get it's going to cross a line where I might get offended, because I know for sure 100% there are things that you could tell me that I could benefit from. I think feedback's a gift, but I put you on the spot. Let's go grab lunch tomorrow and just take 10 minutes, think about it. And then just maybe we can talk about it for 10 minutes. We went to lunch the next day, and for 45 minutes straight, she was nonstop telling me all the things that I wasn't doing that I should be, and all the things that I was doing that I shouldn't be. But it was great. And we had a great relationship. So the point is, that's an uncomfortable conversation for people to have, to go tell someone that they're at fault in some way or deficient in some way. That feels uncomfortable. And the only way to get people to do that is to make it comfortable for them. You need to set the stage. You need to create the environment where people are willing to come give you that kind of feedback. And if there's a problem and people aren't telling you about it, I'd say that's more the result of the way you're conducting yourself and the way you carry yourself than it is about their deficiency.
Yeah. I mean, and you're right. And there's ways to open that conversation. Even probably asking for it every other week. Hey, I want 2 things that you didn't like from me or you think could be better. I don't know.
Yeah, I would say this is that a lot of people avoid giving that kind of feedback out of a sense of compassion. They're like, well, I don't want to embarrass the person. I don't want to make that person feel bad.
Right.
So the irony is, out of a sense of compassion, they do one of the least compassionate things possible. Take a simple example. Let's say right before I was talking to Luke earlier. Let's say that I had spinach in my teeth right before I'm about to come out here, and he sees that and he doesn't tell me. And now I come out here on your show and I got food in my teeth and I look like, well, a guy with food in his teeth, and he didn't tell me. That would be a really mean thing for him to do. So apply that to any kind of feedback at all. Like, hey, in that meeting, like you were loud, you shut that person down in a way that he no longer contributed to the meeting because of what you said. Like if someone has that feedback for me and they don't tell me, it's mean to me.
But they're worried about being mean by telling you that, but you're saying in reality they're being mean by not telling you.
Exactly.
So it's kind of that irony that they're worried, oh, I don't want to be rude and tell this guy that I don't know very well that he's got food stuck in his teeth, so I'm not going to say anything. But then really you're doing a disservice to that person.
Why are we all shaped that way?
2 things, nature and nurture. Number 1, we got 1 billion years of evolution hard-coded into our DNA that makes us react to conflict in a way that's very helpful if you're literally in the jungle or you're looking at a saber-toothed tiger who's about to eat you if you don't either run away or attack the thing. And there's a lot of neurology involved in that. There's physiology. When things happen, literally hormones are released into your blood system, like cortisol and adrenaline, and they amp you up, and they shut down your ability to connect to that part of your brain where like you reason and think. And that's why in a heated conversation, you kind of become disoriented. I mean, think about it. Like, have you ever had an argument with somebody and then you walk away from it and an hour later, the perfect response comes to your mind? Like, why didn't I say that in the meeting? And or in that argument. And the reason you didn't say it is that you literally didn't have access to that part of your brain at that moment. Or, have you ever been in an argument with like a friend or a loved one and you literally can't remember one positive thing about this person? And it's as if your brain dumped the memory function altogether just to survive the threat. And instead you're left with this flashing red light of your instinctive, survival response of like, danger, like protect, attack.
So Gabe, while we're talking about the functions of our brain and how we're kind of hardwired, you talk in the book about psychedelics. So we actually last week just had a psychedelic conference in Miami. Where does that kind of relate to this? So we do have some people watching that are interested in that area as an investment.
Yeah, I saw that, and I've actually looked at a lot of investments in that space. It's kind of crazy how in the past few years that's really blown up.
Yeah,
and so that in the book, I talk about some common traps, like toxic traps of conflict, and the judgment trap is one of the toxic traps. And what's interesting is that judgment can happen on an individual level. And it can also happen at a group or societal level. And psychedelic medication or research into psychedelics as therapeutics fell victim to that. Back in the late 50s and early 60s, there was a tremendous amount of really promising research going on in psychedelics at Harvard, Stanford, and it was showing real promising results. Like the raw data coming out of the research was like, this is awesome. But then what happened was in the late 60s, psychedelics, there's a guy named Tim Leary who used to be a professor at Harvard who was sort of irresponsible with some of the ways he was conducting research. And then he became really into the counterculture, the hippie, like Vietnam protesting movement. And they were very anti-establishment. The establishment didn't like the anti-establishment, and anything about the anti-establishment was judged by association. So they didn't like their music, their long hair, or their drugs. And as a result, the government shut down the wholesale, just completely shut down all research, made psychedelic drugs totally illegal, complete ban for the better part of 40, 45 years. So research came to a screeching halt, despite the fact that the data suggested it absolutely should not come to a screeching halt, and you could just regulate it. So what has happened, though, in the past probably 5-6 years, it started and it builds each year. You're starting to see the decriminalization of psychedelics and then actually the legalization of psychedelics. In fact, city of Detroit, most recent city to legalize psychedelics. And you're seeing tremendous benefits for people who have like PTSD, depression, anxiety. Those substances rewire the neural pathways in the brain to be able to manage the world in a healthier, more productive way.
Yeah, I had never thought about, I guess, the kind of judgment involved in shutting down that whole industry for 40. And see, because it's one of those things you just don't question. You see it as, oh, that's just the way it is, right? Of course, doctors aren't or looking at psychedelics as a way to treat these things, whatever, because it's just not been done. But when you dig into it and see why hasn't it been done, it's because we've had this kind of judgment trap on it.
Yeah, and in fact, I mean, I remember being a kid growing up and hearing about LSD.
Right.
And the conventional belief was that LSD, if you take LSD, you very likely will go insane. Like you'll become psychotic and they'll need to put you in a straitjacket and put you away in a padded room for like 25 years. There's actually very little to no data to support that. It's funny, there's another piece that added to the judgment. The CIA was a pretty bad actor when it came to psychedelic medication. There was something called Project MKUltra. This was a CIA covert. It wasn't just an operation; it was an entire project where they were dosing American citizens on U.S. soil with psychedelics without these people knowing it. Like, imagine just like showing up to work and you get a cup of coffee, and you drink your coffee, and then all of a sudden the ceiling starts dripping.
Right.
You know, or your coffee turns into a friggin' whirlpool and you feel like you're going to get sucked into it. Like that'll just freak the hell out of some people, but that's exactly what happened. So they even had something called Operation Midnight Climax, where prostitutes hired by the CIA would go lure Johns, clients, into what looked like a normal hotel room, but it wasn't. It was totally wired for sound. There was a two-way mirror with a guy behind the mirror with all kinds of recording equipment, and the prostitutes basically would just pour some LSD into a drink, give it to the guy, have him drink it, and then they would just observe him.
Yeah, I mean, anytime you're looking now, like into all these things the CIA has done in the 70s stuff, you're like, is that something they were ever able to get away with, whatever. But it's crazy.
Those are our tax dollars hard at work.
Exactly. So Gabe, even on the front cover, right? It's other ways to detox the conflict in your life and business. That I like that about the utility of this book. That whether you're reading it more through a business lens, how can I improve conflicts in my workplace, or maybe it's just with that uncle at the dinner table, is it equal to you whether you're reading it for personal or business, or is there one you wrote it for essentially more so than the other?
Yeah, so it's a great question, and it hits like actually a pretty salient point. I wrote the book as a business book.
Okay.
In the process of writing, I ended up getting a book deal with a real publisher. So Simon & Schuster's distributing them. It's so it's a real book. And the publisher kind of gave the feedback of saying, this is kind of like a self-help book disguised as a business book. And one of the taglines that I had been talking about even before they had said that was that it doesn't matter if you're in the courtroom. I'm a litigator in my early part of my career. If you're in the courtroom, the boardroom, the break room, the bar, the high school cafeteria, the parent-teacher conference, or the Thanksgiving dinner table, all conflict follows the same sets of patterns. And there aren't that many. They number in the single digits. Like on one hand, you can look at all the patterns, And all you do is you just plug in different names, dates, and facts. And I think one of the interesting things is that at the board level, when there's conflict, it's kind of just the same thing as high school. Everybody in the boardroom knows that. But people who haven't been on boards and are outside the boardroom, there seems to be this kind of like this mysticism about what happens behind that, the boardroom door. But the reality is it's always human beings interacting with each other. We all have what I was talking about, that survival instinct. Another thing is we've all, especially in the West, we've been socialized in a certain way to shy away from conflict. We soften bad news, we sugarcoat feedback. Teachers tell us, or maybe our parents tell us, if you're only nice to say, don't say anything at all. Well, those are good lessons, but they socialize us to shy away from conflict. So what happens is when we are confronted with a conflict, which by the way, I think is always good, and I'll get to that in a minute, we're not equipped to deal with it because we've been trained not to. Our brains are wired not to deal with those things in a healthy way. We're with it to either fight it aggressively or to run away from it.
And that's why you see people get like so defensive, like on any, there are some people anytime they get feedback, like their immediate response is to get really defensive, or they'll project and be, oh, well, you do this, whatever, instead of being able to take that feedback and say, okay, maybe there's something to that.
Yeah, for sure. And there are some, I'll say it, there's some tools in the book that are really simple, but extremely effective in how to deal with that, like in giving someone feedback.
Well, and that's what I'm curious about too, is because it's really, like we were just talking about the judgment trap. Like it's very easy to say we should all be less judgmental of people when we say it. Like it's very easy to hear that, say, okay, I agree with that and accept that. It might be harder to do that in practice. Are there things you can give tips to people how to kind of put some of these things in practice?
For sure. Yeah. I think in talking about the judgment trap as an example, one thing, awareness is really important. Confirmation bias is it's a term that's been thrown around a lot. Warren Buffett, I don't know the exact quote, but he said something along the lines of, one thing that human beings are excellent at is interpreting all new information in a way that it aligns with their previously held beliefs. So anytime someone hears something that contradicts a previously held belief, they'll disregard it, like they'll ignore it.
Or they'll find a way to construe it to match their existing beliefs.
Right. So having an open, it sounds simple, having an open mind is a really good thing to do. And there are some things in the book that talk about how to kind of adopt that perspective. One of the things that I like to avoid judging someone too quickly is that I kind of leverage my own ego. I don't want to look foolish. So I may have an opinion or a position on a particular issue, and I think I'm right. Why? Because I'm me, and I'm always right, right? That's right. So, but I don't want to look foolish. So I should view you, if you express an opposing viewpoint to mine, I should view you as actually a source of information to me. For me to say, you know what? There are probably blind spots I have in my own position that I can't see. There are probably weaknesses in my argument that I'm unaware of. And there are probably strengths in his argument that I can learn from. So I just want to put my curiosity hat on first before I switch back to my judgment hat, and I want to hear what he's saying. And I guess from an ulterior motive, maybe an interim step is, I can say to myself, I want to hear what he's saying so I can really understand it, so I can rip it apart later, because I know he'll ultimately be wrong. I think, though, certainly what I have found is that as I started to do that more often, I started to discount that belief that I'm going to rip it apart later on. I'm like, you know what? Maybe I'm actually going to hear something that helps me see things in a different light. So I'd like to expand my viewpoints.
That's incredible. Yeah, I see some people in the chat saying they want to check out the book. We'll make sure you got that link in the chat.
So I'm jumping in here now. This book, I think, has the chance to have this viralness that hits like corporate America, like books like Who Moved My Cheese, because it's about discussing these things and stop acting like feedback is not a gift. And it is a gift. And so it's like this book talks about that. So someone that I wish shared more feedback with me, I got the book for them because it's all about that. And it's a quick read. It's something, you know, and there's an audible book. If you guys are listening, you should check this out because I'm telling you, in like 6 months, you're going to hear like, oh, did you read this book? Did you read, you know, like, and that's just what's going to happen. I mean, it's going to be, that's what I think. You don't get mad at penguins. I could be wrong, but that's what I think.
I love it. Well, hey, I mean, I hope you're right. But let me plug something specific in the book. One of the great things is that at the end of each chapter, there are these like call out boxes. You probably can't, you need to zoom in, but there's a little call out box that kind of summarizes the chapter. There's like 2 of them at the end of each chapter. And even in the audio book, there's a PDF that has just those boxes at the end of it. So it's something that after you read the book, you have a very quick reference guide to look back at anytime something comes up. And if it's on Audible and you have it on your phone, you could, in real time, like look at that thing. Oh, I'm dealing with someone who's like kind of bullying me right now. This is the bully trap. Let me look at what Gabe said about that. I hope you're right. I hope it does get viral. You know, I know you guys talk a lot about investments. This is an excellent investment in your own future.
Yeah.
How's that for a pitch?
For what is it? $20 on Amazon? You can change your
$24.99.
$24.99. Come on. Sorry for I can sell my guy Gabe short. But I will say, Gabe, so when I saw when we Jason first emailed me about this, I saw the title of the book, Don't Get Mad at Penguins, and I thought it was a genius title because the first thing I did was Google it to figure out what is this about, you know, because like I figured it wasn't actually about penguins. And
True.
So I wanted to figure out what is this about, which I actually was mad at penguins for a while. I'll tell you why. This is silly, but I was like 10 and my grandma took me to go see March of the Penguins. And it was like, I was like 9, like I can't follow a 2-hour long documentary, you know? So did not like penguins
Those
for a while.
freaking
After
penguins
that,
boring you.
just for one day,
Yeah.
for 1 2-hour period, I was bored. I did not like penguins for like 10 years after that, but now they're okay.
Yeah. Penguins are good. They're good animals.
Yeah.
But they can't fly.
They can't fly. And how long did it take you to write the book?
I mean, you know,
Zen Bullish just bought a book. Marshall says he's going to tell his executives at his company that they should get this book. Okay, good job. I like this. Happy Muhammad. Nice. All right, I'm just giving them a shout out.
Sweet. Thanks, guys. You know, I would say the book, the one answer is, well, I started writing the book probably when I was 4 years old, learning how to deal with the world. So there was a lot of prep. But the actual writing, when I sat down and said, I'm going to write a book, that took about a year, the better part of a year. And then once the publisher got involved, they kind of have they lengthened the amount of time, because they have editors and proofreaders and all kinds of stuff. But yeah, it was about a year.
Was the pitch process hard to the publishers?
Too long of a story, but it was a crazy story. My answer is no. I had an introductory call that was set for a half hour where I was simply wanting to learn what a publisher even does, like what role does a publisher play. That 30-minute call went 90 minutes, and then a couple days later got an email saying, "Hey, if you're interested, we've greenlit your book."
Wow!
So you made an impression on the first call. I
made an impression. I'm a lawyer by trade, so I do have a master's degree in bullshit. So, no, I mean, it was great. I think they just really liked it. One thing I've heard a lot from people is that, look, obviously conflict is not a new topic. It's been around since forever. But the feedback I've gotten is that, you know, I have approached it in a way that people haven't seen before and find it interesting. And I would say, I don't know, Jason, I would ask you, there are some pretty funny stories in there too. I mean, it's engaging.
100%. I mean, the stories you tell with other people that you met with, and that company where that guy, so executive brought 2 people into a room. Oh my God, Jesus, phone.
Don't they know you're on? Don't they know?
I don't know. I don't know. But just,
Well, that's some conflict I think we should address later to that person.
Dwayne, I'm on video talking about penguins. Can I call you back? Don't get mad at penguins. Buy the book. Okay, thanks. Bye. All right, that's how we handle that. Now I turn the ringer off. All right. So there's a story about executive. He has a weekly meeting. He asks these two executives, questions, and they keep saying, Sheila knows. And then he's like, what the fuck am I paying you guys for? If Sheila knows, we'll just give her double the raise. And Gabe was in the room, and it sounds like, something that, this may not be good, but will you give more color to that?
Yeah. I mean, this person, the CEO is like pretty direct, very direct, swears it, like his F-bomb to total word ratio is the highest I've ever seen. Like he's just constantly swearing. And you'd think that a guy like that, well, he swears all the time. He does this. That sounds like a lot of toxicity coming out of this guy. But there's virtually zero toxicity coming out of him. And he's created an environment where he basically says, like, if I'm paying her so much money, what the fuck do I need you guys for? He delivers it in a way, and he's created an environment where those kinds of things are said and personal offense isn't taken to it. And everyone just everyone appreciates the speed with which they can move through issues, because he's not going to stockpile feedback. He's not going to have an issue with someone and then go tell someone else about it. He's just in the moment, real time, address it head on, and he'll be blunt about it. But he's not like, and he swears a lot, but he's not like angry. He doesn't yell. And by the way, with that guy, it's very much a two-way street. I was with him, and we were kind of walking through, and a woman walked up to him. She was like a VP of something, and she basically said, like, she went right at him, and she said, "Hey, by the way, the other day, you pulled John on my team." Yep. Away from what he was doing to work on one of your projects. And if you had checked with me first, I would have said, don't get John. I need him to do what he's doing right now. But you took him. And as a result, I risked missing a deadline. I then had to deal with John after to understand why he didn't do what he was supposed to do. I had to deal with the other people who were upset that the stuff John needed to get done didn't get done for them. And basically, you made my job harder. And this guy immediately said, well, I guess I really, F that one up. And then, he kind of said that was his first response. And then 2 seconds after that, he kind of looked at her and just with sincerity, he's like, I'm actually really sorry. That was my bad. I should not have done that. And I'm going to go apologize to John. And I'm going to tell him that if I ever ask him to do something again, that he should feel free to say he needs to check with you first to make sure that's okay. And by the way, I'm never even going to ask John anything again. I'm going to ask you first if it's okay. Like, and she's like, no problem. Just don't ever do it again. And then, and that whole exchange took, I don't know, 120 seconds.
But it made that big of an impression on you that then you're thinking about it years later when you're writing the book.
Yeah, because I've been in many other cultures where people don't swear. They're not aggressive like that, but it's really toxic. And, that woman, if the CEO had pulled John away from what he was doing, she wouldn't have addressed it with the CEO. She'd have just been mad. She probably would have told her coworker, can you believe what the CEO did? Like, how can I work on this? If this is such a pain, and then not only does John not do what he needs to do, not only does that department not get its deliverable out the door, but this woman who heads the department is spending time and energy thinking about why she's upset at the CEO, talking to other people about how she's upset at the CEO and what the CEO did. And guess what? When she's having those conversations and thinking those thoughts, she's not thinking about the business. She's not thinking about how to improve productivity or efficiency. She's not thinking about how to better deliver a client satisfaction. And there's like this conflict tax that companies pay.
Yeah, I think it's so fascinating. You're talking about how, like, in different cultures, it's different, right? I know in you mentioned just in more Western culture, it's just we kind of shy away from conflict. Do you know where that kind of started from?
Yeah, I think it is the socialization I was talking about before.
Okay.
Many of us probably have heard at one point or another as a child growing up, if you don't have anything nice to say, don't say anything at all. And the idea of what is nice has been really twisted, because I think it is nice to tell someone, hey, before you walk into that room of 50 people, that's a little food in your teeth. So I think that's nice. Now, it's true that I will feel embarrassed that I have food in my teeth because I don't know how long it's been.
What about your zipper unzipped? My zipper was half zipped. I was at the driving range. I think I talked to 4 people. No one said a word to me like that. I was really embarrassed.
Yeah. It's funny. I've given a talk. I've given a presentation on how to give feedback, and I have a slide that I put up, and it's Justin Bieber up on stage in front of tens of thousands of people, and his zipper's unzipped. And like, think about that. Think how many people he had to walk past from the time he left his dressing room to the time he actually got out on stage. Wow. You mean to tell me not one person saw that? We'll never know for sure, but there probably were people that saw it, and they chose not to tell him because, well, I don't want to be the one to tell him that.
There's in one of Malcolm Gladwell's books, he talks about these planes that crash, people literally dying because a co-pilot in, I think it's like Japan, because it's seen at, you don't want to talk back to elders, where the main pilot's, an older guy, and the younger co-pilot doesn't want to say, oh, sir, I don't think this is the right path we should be taking. They don't speak up, or they speak up once and then don't really, bring it up again or press the issue, and then the plane ends up going down. And they've studied it. I think he calls it mitigated speech in that example.
So
yeah,
no, the book, like, I see a bunch of people have bought the book. Now, Gabe, do you know? So if you're an Amazon Prime member, I guess you can get the audiobook for free. Does that benefit you then?
I just want people to get the message out.
All right. Okay. Cool.
I don't care how people get the book, as long as you don't literally steal it and commit crime to get the book. I think it'd be great if you're
even member. Then, if it was in like a physical, like a Barnes and Noble, if a bunch of people stole it, like they would have to order more from you, so that would be the worst thing for you.
Well, yeah, exactly.
Okay,
exactly.
Yeah, you took that to an interesting level.
But you still don't want people to steal.
And you need to get the book in those airport things. When people are at the airport in the top in that rack over there, that's a good spot for this thing. Because don't get mad.
I'll buy anything in an airport.
Yeah, airport. So that's a good thing. So you know who I'm going to see in the commencement, Gabe?
Who?
Brad. He's giving.
Oh, right. Brad is giving the commencement at Ross.
I texted you my friend, but I thought you would know it was him, and you didn't.
I did know that, and I just didn't put it together when we were texting earlier.
Yeah.
So, I know that Brad's giving the commencement at Ross. That's awesome.
Yeah, so I'm going up there in a little bit. So the book is called "Don't Get Mad at Penguins and Other Ways to Detox the Conflict in Your Life and Business." You guys remember, like, radical candor, but like talking about it. And I brought up that thing about Andrew, who said that other people didn't like how I mentioned this vacation thing, and I just told him to speak for himself and the others should talk to me. But Gabe brings up the point that maybe they don't, or maybe I need to approach them on stuff like this. It's a challenge when the more people. It's sometimes, as we grow and it gets challenging. Before I knew everyone at Benzinga, or I try to, but those are just excuses I'm making, because there's always a time, like people say, oh, I'm so busy. But in life, it's all prioritization. You can always do stuff. I guarantee people are watching TV, or I know Aaron Bree's trying to take his roommate's kicking ability, so he's trying to be the next punter for the Lions. Aaron Bree, the guy next to you, his roommate is the kicker for the Lions.
Oh, nice.
Punter, but yeah.
Punter.
What'd you say?
Kicker.
Punter?
He's the punter.
Punter. Not
So
kicker.
Wrong word.
But by the way, Jason, go back. If you unpack that example a little bit, I think there's a great lesson in there. The situation you're talking about probably isn't that big, but in and of itself, but it can metastasize through an organization, through a culture. I mentioned the conflict tax or the stress tax earlier. There's a huge stress tax being levied on businesses all over the place. And what happens is, in that situation, it sounds like you said something about a vacation policy and people didn't like it. And no one told you about it. However, the one person that did tell you about it knew that other people had an issue with it, which means
maybe he knew, or he just blames on others. And it's really him saying it. That's the thing I don't.
Okay, that could be.
Know.
But if other people did have an issue with it, that means that they told him and not you. While they were telling him, They weren't doing whatever it is they need to be doing in work. When it's something worse, maybe it's not just a comment you made, but maybe, and I won't even keep use the example, but maybe there's a leader who is really abrasive and uses fear to motivate people in the environment. Fear is extremely stressful because people come to work and they're worried about job security. And that fear translates and turns into anger. And then people start kind of taking jabs at one another. And a lot of energy is spent in the organization dealing with these conflicts that aren't productive. And what then happens is they actually get tired. Like literally people come to work and sometimes they fall asleep at their desk because they're not getting a good night's sleep at home because they're stressed. Or they do come, or they get sick and they literally don't come to work because they're homesick. Or they're at work and they're operating at maybe 60 or even 40% of their capacity because of all this distraction and decreased energy. And a lot of leaders think, wow, we got a lot of work. I got to increase capacity. I got to go hire more people. When the reality is, if they can eliminate the conflict tax or the stress tax, they can dramatically increase productivity and capacity at a fraction of the cost. Not by hiring more people, but just by having the people that are working there happy, less stressed, and far more productive. And then you can actually take that conflict tax and flip it into a dividend that pays out exponentially.
Yeah.
Wow.
And Aaron Breed. So eat it and reap it. Both of us.
Huh?
We both got to live that. Aaron,
No,
did you buy the book yet, Aaron?
Well, Gabe might be nice enough to leave me with this one, but if he does, I'm going to make him.
No. Buy your book, Aaron Breed. I'll buy you the book. Or you buy it and I'll give you the money, okay? One of the three, okay?
All right.
You know, Gabe's a hustling entrepreneur, now book writer, and yes, he venture partners, ePrize, Lightbank, all those places. So Gabe knows the space, knows the industry. It's not just a random guy writing a book. That he's familiar with how these companies operate. And Gabe has seen me in conflict. He's definitely seen me in conflict. One of I guess
sure have.
I guess I won't be as radical as I mentioned Andrew. I won't mention the person's name, but he's seen me in conflict when I feel like someone's being wronged, and I was in conflict, so I didn't like how someone was treating Luke, and then I just didn't want to talk to the person. So then Gabe had me confront, and it worked out. Worked out for a while. Then so.
It worked out for as long as it needed to work out.
That's true.
And when it no longer served you, I understand that. By the way, if you buy the book, especially if you buy it on Amazon and you like it, drop a review on Amazon. Publisher says those are good.
Yeah, I'll drop a review too.
Especially because if you buy it, you're a verified purchaser. And that
Jason, you've already got one on Amazon. I saw it earlier when I was doing some research.
Oh, I wrote a review?
Yep, on Amazon.
Wow.
You did?
Yeah.
Didn't know that.
No, are you sure that wasn't? That might have just been the praise of the book.
Oh yeah.
I might be wrong. It might be egg on my face.
Yeah, my mom asked me. Someone just wrote, "What is my book?" My mom asked, "When am I going to write a book?" I started a book like 10 years ago. I never finished it.
We gotta finish it.
I mean, I texted you a while ago. You didn't respond to that one. I think I can motivate you to write that book.
Yep.
I want to push you to write that book.
I know. My daughter's.
I think it'd be a great book. I think it'd be a great book.
My daughter's bat mitzvah is May 7th. So after that, I'll get shit back to going.
I mean, you know what? Well, May 7th is next week, so that's not a big deal. But anytime someone says to me, I got this other thing, and then after that, then I'll do the thing. To me, that's just, by the way, your daughter's bat mitzvah is a really good excuse, like a great excuse.
Especially the first kid's bar mitzvah.
It's a fantastic excuse, but it is an excuse.
If it was like the third kids, it'd be like, who cares? You know,
Gabe,
it's like that.
Gabe, you're right. And I'm in this weight loss program, and what they would call that is my bitch voice. That's my bitch voice talking. And so when you have your bitch voice talking, like when you say, like I say, I can't do burpees. So that's my bitch voice talking. You're right. If I want, like I should get up at 6 in the morning, spend a half an hour. It'll get me in the thing. And you're right, Gabe. No, that's my bitch voice talking.
I'll tell you this, because I just
I'm
wrote
not
books.
writing 7 or 8 books, Jen Bolus. That I'll tell you. He said,
right. No, I have a sense on how books are getting. We still need to get a lunch one of these days, and we can talk about the book. And I think maybe at least walk out of that, finish that lunch with a sense of, kind of a roadmap.
Okay.
I'd be happy to do it.
Love it. Yep. All right. Well, guys, Gabe, Karp, they're zooming on the book, or are they sleeping in the studio?
Can we get a ceiling cam?
The book.
I don't know.
Don't Get Mad at Penguins. Embrace conflict resolution.
Hold on, we got some. Well, you say something, Jason. There's all kinds of activity behind the camera that happens, and now I think.
By the way, Gabe,
yeah.
when you texted me, you're like, I have a thing at your studio, and you kind of like, I think we're giving a slight to the studio stuff. What do you think, Gabe?
I think it's a great studio. Did I put studio in quotation marks in the text?
Yeah, you put like.
I might have done that.
And by the way, there's another
studio. And then with your producer and your
yeah, and your company. Yeah.
Well, and Gabe, Aaron can show you. There's another studio that is in a little room. Oh, there we go. Now I see it.
Look at that.
Yes, product placement at its best. Okay, and by the way, Aaron,
you could have made your name on here bigger too, Gabe. A little bit.
Yeah, you think I should have?
Like who are the authors that always have their names like huge up, like a John Grish, something like that?
I think the cover should have just been my name covering the entire cover.
I think the name could have been 3 fonts bigger. You're right, 3 fonts bigger, right, Aaron Bree? I pull that up again. Let me see that. Yeah, that name. Yeah, we can make the name a little bigger, but we don't want to be bigger than the title though. So I don't know. Maybe
next book. The name will get gradually bigger,
and the name should be in neon color, just so it pops.
Or yellow, the back thing. Aaron Bree, not Aaron Bree. Aaron Thomas, Rohan producers. Make sure to cut the clip. Like ignore all the stuff we're talking about now, but there was a good 15, 18 minutes. Get that clip edited out, so Gabe can use it for whatever he wants. Okay. So make sure to follow up with an email to him with that clip, please. I know I should be saying this offline, but the stuff that we do behind the scenes, we just put in the front scenes. That's how we do it. I
love it. By the way, that's fantastic service. I don't even care if it happens. The fact that you said it makes me walking away feeling, wow, those guys really care.
Yeah, exactly. Oh God, I just did all right. You guys, we'll talk later.
All right, guys. If I don't see you before Saturday, good luck with everything with Bat Mitzvah.
Are you coming?
I never got an invite. So.
Well,
Awkward.
I didn't know you were part of the, All right.
The clan, the tribe.
The clan. Good use. Good word. Okay.
Yeah.
All right. Thanks, Gabe. Thanks for coming on.
Right.
Sorry, I'm
Thanks,
not
guys. Thanks for having me.
All right. Thanks. See you guys later.
All right.
Bye-bye.
Yep.
All right, Gabe. Thank you for coming in the studio.
Nice. Thanks for having me. And
of course,
you're welcome to keep that.
No, Raz is right. I'm gonna support our local authors and buy this book myself through the nice local online bookshop that is Amazon.
All right, great. Or you can get anywhere books are sold.
But guys, don't get mad at Penguins. Author Gabe Karp live in studio. Smash the like for Gabe. Gabe, thank you again.
All right, thanks. Take it easy.
All right, guys, we've got about 15 minutes left in the show. Gonna go ahead and get my man Spencer back up here because I need him.
Did I miss anything? I've been I was in the bathroom that whole time. Did I miss something?
No, just a little, 45-minute discussion.
All right. Cool.
I'm actually gonna let you run with the show for a sec and say bye to Gabe.
He's gonna leave me here. Wait, what happened to the screen? Why did we do it this way with the video?
Know. I was wondering that too.
Did someone change that? Do we like it? Do we like it the way it is, or do we want it to go back? He just walked in front of the camera. All right, how we doing, everyone? What's up? We got 15 minutes left in the day. In this week's shows. What'd I miss? I was watching Gabe and I was watching Kathy on CNBC at the same time. Well, I wasn't so much watching Kathy as I was just like reading what they were saying about it. Because let's be honest, it's watching something on TV is not even as fun as just watching the people watching it on Twitter, right? All right, let's bring up the S&P here. We'll do the SPY. Off the low of the day, not bad. No real complaints. A 2.3% drop is not nothing, but if we look at the sectors here, all right. Wow, Facebook, or sorry, Meta. I gotta stop doing that. I am, I think, gonna start calling Facebook Meta because that's the name of the damn company. Meta sticking out like a sore thumb. One of the few mega cap tech stocks, the only, I think, in the green today. If you look at the market and you look around and you see what's green, Facebook jumps out. Sorry, Meta. There, I did it again. Tesla jumps out. That is so weird that Tesla is up today. Not just that it's up. Look what it did off the open. That's so weird. Elon Musk sold, what, $4 billion worth of Tesla? He told us about last night. There might be more. Might be more selling. I know he said he's done, but we don't know if he's disclosed all of it. So there could even be more. I'm surprised to see the market react that way to Elon Musk selling Tesla. Anyway. Yeah, I have to read that book. Can you get me a copy of that book as well? Thank you. When Jason Rasnick books? Great question. That's a funny comment there. Sorry, I'm just scrolling up on the chat. I seem to have missed a lot. 8.4 billion now? There is more? Let's go into the pro. Let's go into the SEC filings and let's just search for a Tesla. I mean, oh, see that? Look at that. It's right there. It's right there in the pro. 909, 911, 916. I knew it. I knew as soon as he tweeted out that he was done selling. Dude, he knows that all the filings haven't hit yet. He's just a troll. All right, so now he's done. So what's the final tally? 8.5 bill. Jesus. So how's he gonna get the rest of the money to buy Twitter? That's my question. D'Artagnan bought them. Nice. Part of me now wants to sell my Twitter just so I can say I sold something to Elon Musk. But I don't know. All right. Let's hop into the scanner / signals tool. Signals tool needs a refresh. By the way, guys, if you haven't been checking out the trade ideas widget in Benzinga Pro, I've been really doing my best to hop in there every single day and jump in there with an idea.
By the way, if you would have followed my Amazon puts in there yesterday, woo, you'd be rich today.
You would be not poor. Full disclosure, I don't know what your Amazon idea was.
Scroll down. Go. Oh, you literally just took it off.
Sorry, all right, I'm bringing it back. Relax.
All right.
So, hold on. He says scroll down. I'm going to scroll down.
Well, I don't know. I'm just going to find my trade on Amazon. Read me.
All right, I'm scrolling.
This is my chance to say, see, I told you so.
Wait, how far back down do I got to go? This one? Why? Amazon, so you're bearish. Why? Amazon, like every other company, good use of the, what's that called? The dependent clause.
In a positive.
Has had to struggle with labor shortages, inflation, supply chain issues, and etc. Last quarter, Amazon's revenue was artificially inflated from the sale of its Rivian stake, but Amazon will not be able to rely on that today. Duration, swing trade, risk, high, playing bearish put spreads that expire this Friday, aka today.
Well, that was posted yesterday before the earnings.
I know this is it says it right there.
So if you want trade ideas like that, full disclosure, not everyone is going to be in 100+% overnight gainer like that one was. Hop on Benzinga Pro, and if you don't have an account, great. We're offering a free 2-week trial, so you can try it out for 2 weeks. No credit card needed. You can chat with us in the chat room, post your trade ideas.
Pro.benzinga.com.
Pro.benzinga.com. We also have a code if you're ready, or you can just email me directly, aaronbree@benzinga, and I'll get you hooked up.
Or use the link in the description so we know you came from this show. That would just help us.
I saw a tweet that I liked on Twitter, and I also
Was it from me?
No,
Oh, okay.
I don't know if I've ever liked one of your tweets, but
darn.
this is like I just saw this and it's like a joke, I'm pretty sure, but I thought it was funny, but also like completely plausible. Musk is just pretending to buy Twitter to unload more Tesla shares, and we'll find some dumb reason why he can't do it.
Dennis suggested that this morning, and I thought, I'm cynical, but come on.
Whether it's like to truly sell more Tesla shares or not, I am like more and more by the day.
What if I don't think he did that, but if he did, what an ass.
No, I'm saying throwing the Tesla shares thing aside, I'm growing more and more by the day. Like, sure that there's going to be some reason
But he's going to back out.
Elon can't do it, right?
All right. So what's the range today? The range on Twitter is okay. Good. It's small. That's what you want. That's what I want to see. Look at this range. It's tiny. Let's really zoom in here, right?
See, I don't know if it is tiny for a stock that's been bought out. That might be like a big. I mean, at one point it was down point 3.
No, I mean, all right. The range is $1.50. It's a $1.50 range. It's large for a takeover candidate, but it's small compared to the past few days. So
right.
Let's just keep that range. Let's keep it getting tighter and tighter and tighter, and then I'll feel better. And then
my thing is I think like, and if he hasn't realized this by now, I feel like he will realize it, that this will all end up being more of a headache than it is worth his trouble.
I don't know.
Like,
I don't know. I don't know. Maybe I shouldn't have bought them, but whatever. I did what I did. Hey, I was just going through the earnings calendar for next week, and man, is it busy. This week was the big week in terms of big names, but in terms of just sheer quantity, I think next week is the peak of earnings for this season.
Look at this move we're making in
right now.
Yeah, Tesla, Qs.
Just now?
Yeah, not another drop down.
I mean, we're all right. Call me when we're at the low of the day.
Well, no, I'm saying on the Q. I looked at Tesla.
We're at the low of the day.
Yeah,
all right.
We are at the low of the day. I'm calling you.
All right. Yeah. Okay, so what's yesterday's low, right? Yesterday's low on the Qs, 317.52. All right. Inside day so far. We like inside days. It means less volatility. It means market bunching up for either breakout or breakdown.
Yeah, like I said earlier, I was talking about how, one thing I've learned is that even when you're in the middle of a trend and it feels like, we can't keep going lower, or there's no way this market keeps ripping. Yeah, there's a way. The trend is your friend. So I don't know. We're right here at this support level. Like, it looks juicy, and I want to come in here and buy some TQQ calls that expire next Friday, hoping we bounce from here. But if we fall through here, then I don't know. We're in some trouble, huh?
Yeah. Q's now looking great. Hey, how's the IWM looking? Still like crap? Yeah. Oh man, is it on the precipice? Is it ever? Yeah. So this is funny how that works.
Is it worth taking a gamble here on the Q, sitting right at this support, or have we broken through it?
You want support? Look at the IWM. That's a crazy support. If you want support. Let's go to that's a daily. Let's go to a weekly. Actually, we fell through. We're actually right there now, because the low on these weekly candles is 188, right? 187, and we're right there. So we're technically we are below that support on the IWM, but that had a stronger floor. But your question was about the Qs, and look at the monthly in the IWM.
I want to know if technically we've broken through that low on the Qs, or if we're still sitting at support.
Seeing as how today is the end of the month, I feel like we should only stick to monthly charts here going forward, just for the rest of the day. Oh, look at the monthly in the Qs. 3 straight months. What was the low from February? 318.
Okay.
What was the low in March? 317.45. What was the low in April? 315.
And we're right at 318 right now. So let's watch this, and if it looks like we're bouncing, I may.
Dude, look at these months. Look at these 3. Almost identical highs and lows.
Dude, this is just,
February and March are like identical.
This is where it's just so hard, because like David Green says, he's like, the more something touches that support, the more likely it is to fall through it. than other traders say, like, oh, the more it hits it, the bigger bounce.
Yeah, it really just depends on your perspective. Like, I definitely am guilty of taking flyers, like just buying stocks with the idea that, like, when they're at support, the idea being if they fall through it, I'm done, I'm out, and then that's my exit. And if they hold it, then I'm good, right? I like buying stocks at support because it gives me an obvious out, right? As opposed to buying stocks that are breaking out. Then, you could always just go the trailing stop route and say, I'm going to sell if this thing falls. If it falls 15%, I'm done. Or if I make X dollars, I'm done, or X percent. But support, buying things on support gives you a very obvious out. It falls below that, you're done. Game over. So we're right there, man. We are at the floor. Are we going to fall through?
I kind of feel like we are going to fall through. That's just my gut. So hopefully that means I'm wrong and that means we're not going to. But like my gut is just, and here's why, is that like I feel like this quarterly report from Amazon, and here's what I was talking about yesterday, Spencer, with when I was asking, like, what do you think is more important for the overall market, Amazon or Apple? And even though Apple's a bigger weighting in some of these different funds, the S&P 500, NAS, whatever, Amazon might be a better proxy into like consumer spending overall.
Perhaps.
And I just think like maybe this is just like the shifting of a trend into where we are. I'm not saying like, oh, we're gonna see a reset, whatever, like the stock market's gonna crash. No, but it might just be we're seeing some insights into a more like.
You just said that it was gonna crash.
Huh?
Just now.
No, I didn't.
Okay.
I'm not saying stocks are gonna crash, but I'm saying that might be insights that we're heading into a more like just not as much of like a growth environment, which I think a lot of people already.
Oh, know. I think that ship has sailed.
Right.
That ship sailed 8 months ago.
So
that ship is long gone. Yeah, growth is bad. Hey, where you been? Yeah, okay. Thanks for the reminder, guys. FOMC is next week. So Warren Buffett tomorrow, FOMC Tuesday and Wednesday, and then next weekend, the weekend after this one, is Mother's Day. Don't forget, everyone.
Wait, okay, so we already know Elon Musk. Warren Buffett's gonna say the same. There's things that he said before in tough times, like don't bet against U.S. stocks, right? Like things.
Yeah, he always says that.
So could we foresee like the market opening higher on Monday as like sentiments raised from more? Does he have that effect? Because we already know that's what he's gonna say. He's gonna be long-term bullish. He's gonna be optimistic. Hopefully optimistic. He's not going to be like, oh, everything's great, go buy everything.
I don't think so. All right. He doesn't have market moving power like that.
But if it has like a domino effect, like,
maybe
Bill Ackman's like, oh yeah, Buffett said like we should buy shit again. I should buy shit again. Then everyone else is buying shit. We'll see.
All right. Are the Moon or Bust guys ready? Do we know?
Stream is the redirect set?
Yes, I checked, and I had Rohan do it.
Hell yeah! All right, guys. Everyone have a great weekend.
I'll catch you guys in an hour.
Don't do anything Spencer wouldn't do.
There's a lot that I wouldn't do.
Exactly.
Yeah. Hey, can you smash a like when you're on your way out, please, and thank you. And if you haven't, at the very least, check out the agenda for Vegas in 2 weeks. It's going to be freaking stacked. We're excited to be there and meet you guys and hang out. So go do that right now. I'll end it with the hype video for that.
Love you guys.